All right, and here we go. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so boy, did we have a crazy close to the week there. Not unexpected by any means. We saw quite a bit of weakness in cryptocurrency continue. And then we saw that same weakness transferring over into the traditional stock markets, strength in the dollar, and obviously the treasury yield down again. So let's talk a little bit about what's going on fundamentally. We have spoken quite a bit about how strength in the dollar is going to cause weakness in basically other assets. It's not just the relationship to the actual basket of currencies, but you can find like correlation between actual strengthening in the dollar as sort of like a safety play. People will move into the dollar so that they have liquidity available for them. So what that means is when they move into the dollar and you see it start strengthening, it's strengthening in correlation or in connection or in relation to the other currencies in the basket when you look at the DXY, but it's also strengthening in comparison to the assets where your dollars come out of. So if you look at there as being like basically, two glasses, one of them is assets and the other one is the money or the currency that goes in to make those assets more valuable. If there's only one full glass of water and the other one's empty, as the liquid comes out of one of those glasses to fill up the other one, the initial glass goes down. So as the money flows out of dollars and into assets, you see the dollar glass get less full and the asset glass gets more full. As people start getting scared or thinking markets look toppy or deciding they want to sell off some of those assets, you'll see the liquid come back from the asset jar or a glass back into the dollar jar or a currency or, glass. So there you have basically the connection between those two, even though the DXY is actually measuring the strength of the dollar in comparison to the foreign currencies, the basket of currencies. You can still see a relationship between those two. And that's why it's so important for us to pay attention to, our DXY chart, our dollar chart, so we can see, is the US dollar strengthening compared to foreign currencies, primarily the euro, but also the British pound, the Canadian dollar, the Swissy, et cetera, et cetera. And then also the relationship between the 10-year treasury and the treasury yields and the treasury notes. So like the difference between the actual treasury and then the yield it gives. And then I want to talk a little bit about how that's determined and why that's so important, and why the relationship is directly inversely correlated basically. Well, if you look at it like this, the actual bond itself, when it's issued, is a certain value and has a certain yield. So let's just say, for instance, the bond is $100 and it has a 2% yield. So if the bond is $100 and has a 2% yield, as there's more demand for the bonds, the price of the bond goes up because more people want to buy those bonds. So let's say the demand for the bond goes up from 100 to $150. A bunch more people want these bonds, so in order to get the bonds, they're willing to pay $150. Well, now if the bond costs $150 and the yield was initially 2% on that $100 bond, now that same yield, the 2% that you get, is still the 2% of the $100 that the bond was valued at initially, but now the bond is worth more money. So therefore, the percentage yield on the cost, the value, the purchasing price of that bond is lower. So that's the inverse correlation between the actual bond itself and the bond yields. So if the bond goes up from $100 to $150, now the yield is going to go down by that same percent. So if you took before, the yield of 2% and now the bond is worth $150, you have to basically divide that bond yield in order to get the new yield of the value of the bond, which if the bond went up by 50%, the yield would go down by 50%. And vice versa, if the bond went up to $200, from $100 to $200 and the yield was 2% of the $100, now the yield is only going to be 1% of the $200. But the actual bond, the treasury, all that was fixed None of that changed. It's just based on essentially the demand that drives the value or the cost or the price of the bond up. Therefore, it drives the yield down. And alternatively, it's vice versa. If no one wants bonds and everyone's selling off the bonds and they were $100 and they go down by 50%, so now the bond is only $50, the yield has now doubled. The yield was 2% when the bond was $100. So now if the bond's only $50, that same 2% is worth twice as much. Because the bond's only worth $50. So now it's a 4% yield on that $50 bond. So that's how the direct or inverse correlation between the bond and the yield are so important. So that's why, there's so many different levers inside of this financial system. So when governments or central banks or whatever start pulling one lever, it has direct and inverse correlations with other areas. So if they pull one lever, all of a sudden another thing starts going crazy. So now they have to pull that lever, and then something somewhere else starts going crazy or breaking or has too much stress put on it. So then they have to pull that lever. So it essentially causes all these different things to happen. It's the same with the, repo markets and, reverse repo and everything, all these issues going on here. A lot of what's going on has to do with, an attempt to get yield, but then also an attempt to stay within like regulations. So, people talk about, when you put money into the bank, the bank, that's to us, that's an asset. You have money in a bank, the bank owes you money, but at the same time, that's a liability to the bank because they owe that money back to someone. So if they have too many deposits, which is what's going on right now, you would think, oh, that's a good thing. The bank has a bunch of deposits. The banks are strong. We don't have to worry about them defaulting. That's good for everyone, right? Well, no, it's actually the opposite, because the bank has to worry about now how much deposits they have, because they have to keep a certain amount of collateral accordance to those deposits. So if the deposit is a liability to the bank, the more liabilities they have, the more like collateral they have to have on the back end. Therefore, the excess deposits into the banking system causes weakness in the banks and causes them now to have excess reserves to back up those, which is part of the reason why in the United States they got rid of the 10% reserve. So before, you had to keep 10% of all the deposits in case people wanted their money back, so it was liquid, it was available, etc. So you had to keep them in the banks in case people wanted it. Well, all of a sudden they got rid of that reserve so that banks didn't have to worry about it. Oh, don't worry, you don't have to keep any money at the bank. So, we trust you. Everything's fine. And, people talk about how the banks didn't get a bailout this time because the banks are strong, or they try to sell that narrative. Well, it's the exact opposite. If you take trillions and trillions of dollars and you pump those trillions of dollars into the system, and you use like the actual banking system to deploy that money, to deploy that capital, to give that money to the people and to the businesses, you don't think the banks took a cut? You think they spent, 5, 6, 7, $10 trillion? You think that money flowed through the banks and the banks didn't get any of it? No, the banks got tens or hundreds of billions of dollars because they keep, 1% or 3% or 5% of all that money that flows through. Like when they underwrote those loans to all those businesses, when they gave away all that PPP money or all that other money from all these different programs, all that money flows to the banks. The banks get a cut of it. They get a percentage. They get a little something off the top. So don't think for 1 second that the banks didn't get bailed out. Everything got bailed out. The only reason people aren't complaining about it this time is because the people got bailed out too. But at this point in time, it's gotten so excessive. Now people are worried about it. And that's why we're starting to see, the pushback and everything. So now that we talked about a little bit of the correlation and, causation and the way these levers are causing all this, problems in the bank, let's get to the actual charts, jump into it, and we'll see what's going on here. So here we have just to get started. First, we have the 10-year Treasury. Nothing has really changed on this. We still have broken down from our level. We're at the heart line of our broader channel, and we're still on track to our target. The consensus was for some time that the Treasury yields were not going to go up. Then everybody got on that side of the hype train, and everybody was swearing they'd be up by 2% or 2.5% or 3% by end of year. And then, we obviously saw that topping out. We see it coming down now. We see on the daily, the TJD, TDMACD is down at the bottom of the range. We are still seeing weakness here. We did get the buy, sell, buy signal, so maybe this is bottoming out, but we could easily get that same signal again multiple times. I'm not too excited about this. This does not look, does not look especially bullish to me by any means. It looks like we have basically sold off, hit the measure move of the channel, hit the heart line of the channel, and now we're basically just consolidating here. I still think we'll go lower down to like this 1.0, 1.13 range, and we'll have to see how that plays out, but I'm still looking at that in the same way. As far as the TLT, again, this is basically coming up, putting in that right shoulder like we discussed before on the daily. It's definitely up at elevated levels. Looks like it's getting ready to show a little weakness and cross back down. But as far as I'm concerned, we still have 2 greens on the histogram for the TJD, TDMACD. We still are above all of our moving averages now. We have closed above the 200 exponential and simple. We're still a little ways from getting a positive slope on the 200 simple. But on the daily, overall, this looks good. Although it does look like we're getting ready to cross the stochastics to the downside. So, it's definitely a possibility that we will be topping out soon. Definitely also a possibility we get a little more follow through. And then, of course, this is the 20-year Treasury bond. If the 10-year Treasury or 20-year Treasury rates are still dropping, we would expect the bond prices to continue up. But we all but hit our target here. So just a little more of a push to the upside would be perfectly acceptable, but not necessarily a requirement at this point in time. So let's switch over to the dollar real quick. DXY, still looking great. It basically, still looking great. Still strengthening. Overall, the trend is getting a little tired, but we're consolidating here at the top of the range. The way I'm looking at this right now, and we can switch over to a shorter time frame just to kind of see the development of this. But overall, this little oscillation, this little pattern, everything going on here, looks to me like we're basically just forming a channel up here. And this is typically like a bullish continuation channel, what we're seeing take place here. So if we basically just pick our top of the range and then our bottom of the range, depending if you want to go by wicks or bodies, how do I determine that? Well, if we're going to go by bodies here, we'll look at what kind of interaction we're getting on the heart line of the channel, as that's a factor. Or we can look at, basically like if we go just from the wicks and just kind of see what looks like it lines up better. So if we go body here to body at the bottom, body here, we have very clean, very clear interactions with the range. But we could easily see how, the heart line looks decent at these levels, but it doesn't look amazing. If we just go down and move this down to like some of our wicks here, we'll see how the interaction with the heart line changes. We basically have interaction here, very clear interaction here, very clear interaction here, 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 so we're having a little more clean. So I like it a little better like that. So we can kind of see how the wicks square it away. And I think honestly, this is overall where we want to be. And then if we keep into mind also, this is on our 4 hour. Now, if we switch over, well, let's look at the broad picture here on the shorter time frames. We basically have topped out in this area here, bottomed out, topped out, and then we sort of are showing strength as we're staying towards the top of the channel and not coming back down to the bottom. So is it possible we're putting in more of like a wedge pattern? Yeah, definitely. But I like this channel. I like how it looks. And overall, this looks to me like a, fairly bullish pattern. Now, if we look at this right here, does that change how we look at everything? Well, we can see, interaction quite a bit between the heart line of the channel. So we'll leave it here like this. And typically this is a bullish continuation pattern. You're basically strengthening and then you're just consistently putting in higher highs and higher lows. So does it have to go on forever? No, it could easily sell off. It could easily break down. But now we at least have a reference point to pay attention to. We are seeing a little bit of weakness here, a little bit of bearish divergence potentially developing on some of these indicator oscillators. We're seeing more reds start showing up than greens. So do I think it's possible DXY is going to cool off here for a little bit? Definitely. But we're also at a very, very key resistance point. So obviously I have all the drawing tools basically off this chart right now. But just to kind of get a better idea as to what's going on here, just keeping it very, very simple. In this one, we have a very clear resistance right here, basically where we had, put in essentially a top on this move right here. So we would expect when we run back into that area to run into resistance as well, as that's where we topped out on the daily. So we're getting near that area, but we have quite a bit of price action that took place right through here as well. So, are we drawing that correctly, or should we zoom out a little bit and see if there's a better area to kind of put that into? Well, look right here. If we switch over now to the weekly and we kind of move that down to where the weekly closed right here, we'll see it sort of lines up a little better. We have a lot more bottoms, a lot more correspondence here, a lot more areas of support and resistance. So is that where the line should be? I think that's exactly where the line should be. So we have a very clear, W double bottom right here taking place. So we would expect some more resistance here. If we creep up just a little higher to like that 93 range, the longer we consolidate at this resistance, the more likely we are to break to the upside. And then we can see, depending on how you want to look at this, we can get a measure move, basically from the bottom. This is just, taking into account the W pattern right here. We can take into account for a W measure move break to the upside would be like the distance of one of the V's of the W. So in this case, we kind of look at this as the Eve pattern, and this is the Adam. So this is like an Adam and Eve double bottom. The difference between the Adam and the Eve, and these are, nice little things to have, not necessarily that important to identify the difference between, an Adam or an Eve, etc. But the most important thing is to be able to identify that we have a double bottom taking place. That's the most important thing. But typically with an Eve, you'll see more of a like round shape like this. That's like our female, and then with the Adam, we'll see a little bit more of a, pointy or more of like a V shape take place here. And, that's our Adam. So this is essentially what I'm seeing here. That's our Adam and Eve double bottom, or in this case, our W double bottom. And when we break to the upside, we would expect to move right here. Now, there is another way that you could look at this. We could essentially, if you were paying attention to, let's use the appropriate tool here. We will switch over to our head and shoulders. So an inverted head and shoulders is the opposite of a head and shoulders. If you imagine, basically this is someone's shoulder, that's their neck, this is their head, this is their neck, that's their shoulder, and then that's back at their neck. And then the breakdown is from the head to the neckline measure move. So if we just draw that upside down now, and we figure, okay, well, this is going to be our shoulder, that's going to be our neck right here, this is going to be our head down here, this is going to be, once again, depending where we go to, our neckline again, and then this is our shoulder, and then back to the neck again. Again, same type of thing happening. We're having basically a push down to a low, and then we come down to a lower low, and then we come back up and find resistance, and then we come down and we find a higher low. So now what we want to pay attention to is if we got the measure move break of the head and shoulders from the head up to the neckline here, how high would that take us? Well, that's where we're going to get a slightly larger move, measure move, or pattern move. Now, it's possible this could underperform or this could overperform, and we end up somewhere in the middle. But, essentially that's how we get those two moves and what those potential patterns playing out could be. So now if we're looking at this now as our head and shoulders instead, maybe we want the neckline down here, and we want to have it at our candle closes here. So we have one at the candle close here, one at the candle close here, and then you see we ran into resistance here, but then we closed outside that neckline. Maybe you want to keep it on the wick, and we'll switch to the daily time frame just to kind of get an idea. And again, all this stuff is subjective. That's why it's so important to, pay attention to what could potentially happen so that we don't get a false signal or, a false breakout or something like that and get overly ambitious on a trade and then it fails. So if we switch now to the daily and we pay attention to what's happened here, yeah, maybe it's not quite as clean of a pattern. We're just slightly moving some of the stuff around here, but overall still painting the same picture. Now the difference between the weekly is if we go to the weekly close here, we go to the weekly close here, or wicks either way. Now here, look at where we're running into resistance at. We basically came up, got rejected on the neckline once, came up, closed above the neckline, and then immediately sold off, came up to the neckline again, found resistance, and now here we are hanging out at that neckline. And if we get that break is going to take the dollar up very, very powerfully to the upside. And you'll notice obviously also if we pay attention to that same resistance line that we had identified on the weekly here as well, we can see why that is such an important line when we go back and just look at the history of price action. Now through here you could argue there's quite a bit of chop, and nothing clear, but here we very clearly find some support right here and then continue up, some support right here and continue down. This is very clearly resistance a couple times here, and then again once we break up through this, we retest it, we retest it, we retest it, and then we come down, we retest it again, break through it, and then can't hold it, we basically are oscillating in this range. So we're seeing that same thing take place. So we have a very clear support down here at the bottom of the range. We have a very clear resistance right here. And then we have a potential target to the upside. And then if we want to go ahead and just put that support into place, let's say we're wrong and all of a sudden the dollar just starts losing strength and, selling off and it can't get through this. Well, now we have a very clear target to the upside, if we get that breakout. And then we have a very clear target to the downside, right back down to that same level, maybe even a slightly lower than those two previous times. So, and now if we want to start looking at, what's our next target if we do break through that to the upside, maybe we come all the way up to the top of the range, in here. We have quite a bit of resistance, broke through it slightly here, found some support, couldn't hold it, resistance, broke through it, couldn't get back above it. So, any one of those things is possible. We're not always going to be right in these situations, but if we identify them ahead of time, at least if something gets invalidated and we're wrong, we immediately already have a target in place. We don't have to just like scrap everything and then go back through and say, oh, we messed up. Like we got to start from scratch and figure out what the heck's going on here. So, and again, we can do the same thing to the downside here and have another target in place. So now we have these four very clear support and resistance levels. We have a couple of little key patterns here taking place as well with some potential target moves to the upside. And then we have our indicator oscillators as well. We're obviously seeing the bullish cross. We're seeing momentum gained on these stochastics. And then obviously here on the TJD TDMACD, we were in a very clear consolidation or downtrend while the slope line was red. And now here we have the slope line is blue. We're above the zero line. We have multiple green histograms in a row. Everything is showing us bullish on our indicator oscillators here. So now let's look at the big picture and see how some of this other stuff lines up. So now we have some very clear resistance and support lines. You can see how many times we've interacted with them. We could keep drawing some in. We could put another one down here at the bottom if we wanted to, etc. But now let's pull out, that's just using basic support and resistance without any of our tools. What if we take from the bottom here and then we draw to the top and we see what happens with our Fibonacci levels? Do any of those line up specifically to the levels that we just drew? Well, here's our Fibonacci's, so we can kind of see, basically this, we have a little bit of them lining up, but not quite perfectly. So that tells us one of two things. Maybe this move isn't done and we didn't top out here all of a sudden, or, maybe this just isn't the right Fibonacci. Maybe we're just not looking at the right Fibonacci level. So what if we just sort of move this around a little bit and just saw if there was an area they sort of lined up at? Oh, wait a minute. How did that happen? So look at this. How did that happen? So this is the area we have drawn so far, and we don't see any direct lines of the Fibonacci. Let me make this a little brighter too, so it's a little clearer back home for you guys watching. And then, you know what? I will turn it white. So here we have, this is in the middle of nowhere. This was our previous top, obviously, right here. This is, sort of lines up, but not really. In the middle of nowhere, we're not really seeing that perfect line situation taking place. So, this is essentially projecting out future targets in a way that's like, quote unquote, not measurable, but you can kind of see what like bots and algorithms are thinking. And this is like a very advanced technique, very little reliability. It's more of a look back technique when you look back and see how these things have lined up. But again, if we just start moving this up here to where it could potentially turn out into a target for this move, look how all at the same time, the 618, the 0.5, the 382, and the 236 all line up with those levels that we have drawn on. Look how they all come into line at the exact same time. How is that possible? Is that just luck? Maybe. Is it bots and algorithms with predetermined targets in mind for where the dollar DXY is going to potentially move to? Probably. But regardless, it's at least notable that there may be a very clear target up here. Is it unrealistic to think it could get back up and we have a high, we have a low, we have a lower high, we have a lower low, and then we come up here and top out again and we put in a lower high once more and then sell back off? That seems very realistic to me. Keeping in mind, this is obviously, over a 40-year chart. So let's see if we took our high up here, and then let's see if we line that same high up with right here where we topped out. And then let's see if we line up our lows down here as well. It doesn't quite line up perfectly. Maybe we do something like this where we have the clear bottom here. We kind of poked out of the bottom here a little bit, and then we sort of see it here. So maybe it's not perfect, but is it possible that we, bounce up somewhere here and find a target in that area, let's look at basically when we got this previous move, how long did it take to get that distance, to get that range up there? Is it realistic to think, based on the speed and the angle, this is almost like straight up. So could we easily get a move straight up here by like, August of 2023, where we top out in this range? I definitely think we could. Now, again, this is more like theory crafting, looking out and seeing potential, because this is not like a validated fib level because we haven't made it up there yet. But if we switch over and look at that Bitcoin chart and we talk about how those Bitcoin levels lined up previously, and you wouldn't have known it happened until we topped out at 4,000 or whatever. Now you start seeing how you can project out future targets using a Fibonacci level based on just identifying very clear support levels. Can I be wrong here? Is this just fantasy? Am I just imagining things? Yeah, maybe. Maybe I'm wrong. Maybe this is just luck. Maybe it just so happens that the 618, the 0.5, the 382, the 236 all line up perfectly with those very clear resistance support lines, which if we just for a second here, just to see, make sure I'm not playing tricks on you guys or anything, let's look at some other fib targets and see. This would be from our swing high to our swing low. Let's switch this one to a different color. Let's color this one, make this one like a reddish pink. Okay, so let's see, does this one line up with those same levels? No, not really. We kind of have a line right here, which is very clear resistance. Sort of have a line right here, but nah, there's nothing really lining up right there. That's fantasy. Maybe compared to those resistance supports that we identified at least. So let's try from the very top over here to the very bottom right here. Do those line up? Still the same color, still got our red ones. How do they look? Well, obviously from the very top of this swing to the very bottom of that swing, we're seeing some clear interactions at some of these levels. It's definitely important. It's definitely worth paying attention to. We found some clear resistances and supports. The bots and algorithms are keeping this in mind for sure, 100%. But now, is it lining up with our blue line? No. With our green line? Yeah, it is. It's perfectly lined up with our green line at the 382. Is it lined up with our yellow line? Nope. Is it lined up with our white line? Yeah. No, that's a different one. Sorry. That was our red line right here. So no. 618 right here? No. So, this one is obviously being taken into account here. But why is this one key fib level here from the bottom to our imaginary top lining up perfectly with these very, very clear resistance and support levels? I don't know. Maybe it's luck. Maybe there's just random luck that just so happened to happen. Maybe. I guess we'll see though. Maybe we'll look back at this chart in, the end of 2023, a couple years from now, we can look back, and if it tops out exactly here, or maybe it takes only 6 months to get up there and it tops out exactly there, and, maybe we look back at it and say, wow, I guess that wasn't luck. Maybe we should use that type of thing in the future. Maybe there's possibility that we can use this as a sort of predictive tool. Maybe not though. So, and there's obviously other ways we can predict targets or project targets as well. But in order to project out a retracement target to the upside like that, we would have to take from a high to a low, and then we could use Fibonacci extension targets. So maybe we need to go from this high to this low right here. And I understand this chart's getting busy now, so it's more and more difficult to see the more we do this. But let's say we color this one yellow. Well, is this yellow one lining up perfectly with those levels? No, we're definitely seeing a little bit of it lining up, but it's not lining up perfectly. So I don't think that's it. I don't think that we're just drawing it in a tricky way that makes it look like we know what we're doing, but we're not. Let's try all the way from the top to the bottom. Well, oh, that's our red one. We already did that one. Yeah. So what's our next potential? Well, we could do from like here to here, and we could get a Fibonacci extension up to here. We could do from here to here and get a Fibonacci extension up to here, but that's not going to explain the blue, the green, the yellow, and the red. There's no explaining it other than exactly what I said, that these are targets that are already in place. There's already bots, there's already algorithms, there's already market makers, market movers that have picked these areas out, and they have projected them out into the future. And then we can use other things like time cycle analysis, the channel, etc., to just see, does this stuff add up? Does it make sense? We could look at the amount of time between the initial top here in 1986 and the top here in 2001. So how many years was that? And then maybe we can project that out using our time cycle tool. So maybe that's something we need to do. So let's say this is our top right here. And then we pick our top right here as our second top. And then we have a, we have a top right here as well. So yeah, maybe that was our top, that was our top, and then that was our top, and it's all done with. That says our next top won't be until, 2000 and, it doesn't even say, 2034 or something like that. So maybe that wasn't, maybe this isn't right. We'll have to see. There's only so many things that we can do here, projecting out into the future when you have this few data points. But when you start looking at things on longer time scales and you start looking at like the correlation and how some of this stuff lines up, we can start to get more and more reliable targets and more an idea of like the actual macro and what's potentially going to happen. And if we switch over to the month here, again, we can turn off all of our drawing tools and let's just switch over to our moving averages and let's just look at what's taking place on the indicator oscillator down here. Well, we'll see we had from our top to our actual bottom here, we had two different times before we actually bottomed out. Like, false alarms, false signals. And then here we had two different times, and then we actually bottomed out on the third situation right here. And then again, we have two different times, and then potentially we put in a lower low still and bottom out. So does this have to be the low on the DXY? Is it possible we could go lower still? 100%, it definitely is. But if we pay attention to this, what happened even when we got those false signals? Well, from when we got the cross right here, and I'm going from the indicator oscillator cross right here and leaving the bullish control zone to our next top, that was a 21% move in the dollar compared to these other currencies. Oops. And then if we do the same thing again and we pick our next point right here and we look at the actual cross and leaving the bullish control zone, we had a 14.7, so let's say 15% move the next time. And then from our next point that we have that cross, again here, I'm not cherry picking. I'm going from the top, not from when it sold back off to the next stop here. We have a 40% move in the dollar compared to the basket of currencies. And then, without getting too repetitive here, this one is sort of a false alarm, kind of just sells off right away. And then we got our next one right here. And that one is a, 10% move, 9% move. I'm sorry. Ooh, keep clicking the wrong thing. And then from our bottom right here, where we cross to the top, we have a 30% move right here. And then our next one right here, we have from we leave the bullish control zone and get the hard buy signal, we have a 12% move. And now here we're doing it again. So what is the average? I mean, are we going to get the mean, the median, or the mode? Are we going to get a 9% move back up here to a triple top? Are we going to get a 20% move up to 113? Are we going to get a 30 or 40% move? Well, let's draw back in our other tools here and see what the most likely situation to happen. Well, we have a very clear resistance right here. So assuming that what we're taking into account makes sense, assuming that we get that move, how far would that be? That would be an 18% move. So I don't think that's unrealistic to think that we get an 18 or 19% move over the next, 6 months to 2 years. In the dollar compared to other currencies as the world destabilizes and, a lot of other, smaller countries or foreign countries or whatever, basically go into the dollar because it's sort of a flight to safety. The same way that like U.S. bonds, treasury bonds are sort of a flight to safety. Do I want to be owning right now, and this is not an attack on any country or anything like that. Would you rather have bonds in Cuba right now or bonds in the United States right now? Well, obviously, you'd rather have them in the United States because there's a bunch of crazy stuff going on in Cuba. So that gives you a reason why on the macro, there would be potentially like money coming into United States, as it might not be the best investment because they're printing money, but it's probably safer than a lot of other countries are. In the same way that, we would see the strength in the dollar. If everybody's printing a bunch of money, but, Turkey is hyperinflating or, Zimbabwe or some other crazy country is hyperinflating or, their currency is going down faster, you could see how there would be like a flight to safety into the dollar where people would rather have dollars than have those currencies. Even though dollars are not great, dollars are good because they're very liquid and, very solvent. You can always spend your dollars somewhere on what you want. You never have to worry about, is somebody going to take a dollar? You can go to most European countries and they will take dollars. You can go just about anywhere in, on earth, and they will take dollars. You don't have to switch into their currency, although, it is sort of like arrogant or ignorant to not do so. But the fact of the matter is, lots of places around the world would gladly accept dollars. So there's sort of like a little macro view, a little bit of an idea how we can use not only our Fibonacci itself to identify moves that have already happened, but we can also use Fibonacci extension targets. And then finally, we can do essentially what we're demonstrating right here, where we can sort of guess or project out into the future based on interactions of the past. So we're using what's already happened in the past and key support and resistance levels to identify what could happen in the future, where these bots, where these algorithms could be identifying the targets. So I don't normally jump around all over the place, but let's actually go over now and we'll look at a specific example, and then we'll just get into straight TA. But I did want to talk about that. It has been a very popular conversation in the group, and lots of questions on that have been happening lately. So I really wanted to get into that. So let's turn off we're going to go to the Bitcoin chart here, and we're going to take a look at what's going on here, because this is a perfect example of what we were just discussing and how we can use these Fibonacci's to actually determine things before they've even taken place. So let's go to our weekly chart. So here is our Bitcoin weekly chart, and obviously, we did not know that this from back here, the low in 2018, and then our high here in 2021, we did not know this was going to be our high until it just happened in 2021. But if we look at, let's delete off this one here real quick. We have looked into depth in this in a previous video, but if we look now at what has taken place here, well, there's some very clear resistance and support zones that have had correlation throughout this entire move up that we wouldn't have known until we got right here. So let's look at a couple of them and just sort of identify them. Well, there's obviously, we're seeing some resistance right here, and there was a clear area that we broke through right here. That was very clearly the bottom of the second wick right here, and it was very clearly a resistance through this area right here. That one's a little sketch. Maybe, maybe we're kind of pushing on that one, kind of reaching. But what about this one up here? Let's look at this one. Turn that one green. Does this one look like it was very important? We had support through here. We had support through here. We had resistance here. We had resistance here. We had resistance all through here. We broke through that resistance. Then we found support. And then we continue to, up to the upside. I would say this one is very clearly seeing like consistent interactions. Well, let's look at this next fib level. What was that one? Well, we only saw one real interaction, but where was it? It was the absolute top right here, the 14,000 top there. And then it was also the key support from the breakdown in 2017. So you could argue that one was somewhat important, maybe not extremely important. Now let's go up here to this one. We'll skip this one. We don't need to pay attention to that one, even though, that one was obviously somewhat important here too, because now that one lines up with, our previous top at 20,000 and then the little resistance area here. But we would expect that to be resistance, even if we didn't have a target into the future. So we can leave that one on there. Let's go to our next one here and see why would this one be important. Well, this is the area that we're barely hanging on to right now. So on the way up here, we broke through that, came back down, retested it, found support, and then continued to the all-time high. And now once we had gotten to the all-time high now, we can take this fib and we can draw this into place. So let's delete this real quick and just kind of get, I think it's very realistic to think that we could have had these in here as resistance levels at any point in time along the way. Key resistance and support levels on Bitcoin. Key resistance here, key support right here, not as useful here. Key resistance through here, obviously that's our all-time high. And then of course support right here. And then finally our final point, you could say is the resistance level up here, as that's, basically us topping out. So, you could easily argue that even without any Fibonacci levels or anything, that these are key resistance and support levels. Some obviously more important than others. This one was, very important throughout this range. Quite a few times we had very clear touches on it. This one maybe a little less important. It was our support through this breakdown. It was our resistance through here. This one, all-time high. So yeah, that's decent. It's important. And then this one finally, our support after our like parabolic move up, find support and then continue to the all-time high. So then if we just take our Fibonacci now and we just draw that back in, from the bottom here, this is exactly what we were doing in that other chart. We're basically just moving. We only have, you know, this all-time high for right now, so that doesn't line up. We'd only have this all-time high, you know, once we got to January. But once we got up here and we got to this all-time high, let's look at how these lines line up now. And I'm going to make this one white again. And you'll see what I'm talking about projecting, you know, the high. When we move this, oh, what did I do? Sorry. There we go. When we move this up here, you'll see there's an exact point where all of these white lines just perfectly line up. All of a sudden, when we get to that all-time high, you know, this line lines up perfectly, 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 and then obviously our top. So is that fantasy? Well, up until, you know, our all-time high of April 2021 from our low of December 2018, anybody that drew this, you know, during that like basically 3-year period, yeah, it was just fantasy. You can't argue that that's a real target into the future. But then once we tag it and it gets there and you put it into place and you look back at it, you Jensaki, circle back to what already happened, we can see very clearly that that was an important area. So was that a target into the future? Was there bots and algorithms predicting that to be the top? Was it just luck? I don't know. I mean, but if you ask me, if something happens once or twice, you could say it's a coincidence or it's an accident or it was, you know, oh, that's crazy. What are the chances? But when you look at it and you can clearly do it over and over again throughout charts, to me that looks like a projection into the future that something already has that level in mind. There's something else. And you could argue it was Fibonacci extensions. You could argue that it was, you know, percentages of previous bull market moves that take us up to those levels. Whatever you want to do, the fact of the matter is it works. It's reliable enough that it's worth looking at. I'm not going to go all in based on that. I'm not going to trade everything based on it. I'm not going to use that as an overweight indicator for targets into the future, but it's definitely worth paying attention to. So, you know, now we can see how that worked on Bitcoin and why that might be important on the dollar into the future. So, and again, you know, it's just one more tool in our tool belt, one more thing that we're looking at, one more proven thing that has happened and has correlation that, you know, other people aren't really talking about. I've never seen anybody else do that before, you know, but it's clear that these bots and algorithms are doing stuff like that. So while we're here, let's just jump into crypto. What's up, my man? Good to see you in the chat over there. Our kits, big moves coming soon. Oh yeah, man. I mean, you can tell with what's going on here. You know, we've basically been hanging out at all-time highs in traditional stock market. We've been hanging out at this support level in crypto for some time now. It is very, very clear that there are big moves coming. The question is, in what direction? Bum, bum, bum. But you guys know, obviously, like how I feel. Obviously, I think the direction is down. Everybody was talking about Wyckoff distribution in Bitcoin after it happened. You guys will remember, though, when I started this channel way back multiple years ago, before the CVD strike, before we topped out, I did a Wyckoff distribution pattern chart on the S&P 500 and Dow Jones Industrial Average before anybody had heard about, you know, the Wu flu or anything like that. You know, that was in what, the end of August in 2019. And then all of a sudden we got hit in, you know, January. You started hearing about it a little bit in China. And then by, you know, March, everything had collapsed. And if you look at where the lows went to, you go back and watch like one of the very first videos I ever put on this channel. And it is Wyckoff distribution targets. And it actually like calls the exact bottom on the S&P 500 and the DXY literally perfectly using Fibonacci retrace tool and Charles Dow theory, and of course Wyckoff distribution. So, you know, you could say that I've been doing this for a while. Now I am seeing the same way that we saw it taking place. We saw triple bearish divergence on Bitcoin, the same way we saw that Wyckoff distribution taking place on crypto. We're now seeing that take place on the different indexes. And depending on which stocks you look at, you know, it's different. Like something like, for instance, the Russell. And again, we'll look at that stuff in a minute here. I'm just going to go into crypto right out of this. But if we look at what took place in the Russell, we didn't make another all-time high that whole time. If you look at what place took, you know, we basically just been going sideways. You look at what took place in NASDAQ, and, you know, we basically sold off heavily and then didn't even get back to the all-time high until just recently. So we basically went way down and then consolidated for a while, come back up, and now we've essentially put in that, you know, argue call it what you want to call it, whatever, but we basically put in that throw over, and the throw over is a typical portion of the Wyckoff distribution pattern where you chop around sideways in an area while distribution takes place, and then the market movers, market makers, whales, whatever you want to call them, push the price up to a new all-time high, use the stop losses that were in place of the shorters to fuel that push up as high as they can, and then sell into that price action, and then use the momentum break as it breaks back down underneath that support level, underneath that, it's the opposite of the spring, but I call it the throw over. But when you break down past that top resistance and it does not hold that support, you now have a throw over. So all the shorts re-enter their positions. All the people that long the breakout now get stopped out, and then it causes momentum back to the downside, and then often it's enough to break through the support level that was holding all through the distribution pattern, and then you'll start seeing last point of supply, etc. So, but regardless, let's jump into our Bitcoin and take a look. Not a lot has changed, obviously. If we look at our Bitcoin futures chart on the daily, some important things did take place. We have last week, the end of the week, we got a new daily close, a lower daily close. So we now have one more close, daily lower. We are still below all of our moving averages. The 200 exponential and simple are rolling over. The exponential is already sloped to the downside. The simple still has a positive slope, so there's still a little bit of hope, but we are getting very close to our daily Bitcoin death cross. When the darker green crosses below the darker blue, and when the lighter green crosses below the lighter blue. And this is obviously the futures chart, so it does not take into account our weekend information. So, it's going to obviously respond slightly differently than our traditional or spot markets are, because they're open all the time. And again, we got the cross between the 821, the red moving average, and the yellow moving average way back here at $8,000. Took the long, and then obviously we got the cross back down below on futures at $44,000. Price action was already well below it though, at $35,000. And obviously on the weekly, you do not want to be in that position any longer. We have everything looking bearish here. We're very clearly in the bearish control zone. We have flipped the slope line over red, and we have all red histograms. We are below the zero line. Everything on this chart is bearish. And then on top of that, our new weekly close here from last week is our lowest close on the weekly so far. So now we have a third lower weekly close as well, which is obviously bearish as well. We have now broken down from the 55 exponential, the bright green, and the 50 simple, which is the darker green right here. So our next target to the downside, when we break this very clear descending triangle, is going to be our 89 moving average right here, which is at 26,835. But we do have another area that we've been talking about since the whole way up, and people are saying, gaps don't always get filled, Well, that's correct. Gaps do not always get filled. Sometimes they also take 6 months or a year or whatever to get back to fill them. But we have a very clear gap that we left behind here at $24,000. And, it's not unrealistic to think that we come back down and close that gap if we do break down from this level. So anywhere from $24,000 to $26,800 looks very likely for our next move down. We could use a lot of other tools as well to look at that. Let's go to our monthly here, and we don't get a ton of information from our monthly just because the futures is only a few years old at this point in time. But on the monthly, we have left the bullish control zone. We have gotten the hard sell signal and the cross on the stochastics to the downside. We have now our third month in a row of red histograms, and we have broken down from our 8 moving average. We have a lower monthly close. We have basically a close here, which is our first close, then we have a lower close, then we have a lower monthly close again, and it looks like unless something great happens and all of a sudden the bulls wake up from their slumber, from their hibernation, from their getting wrecked by the bears, they have 11 days and 21 hours, so 12 days to basically stop this from being a lower close. In order to do that, we have to get back up above 34,800. If that did happen, it would at least be a sign that there's some life left in the bulls, but more realistic, it looks like at this point in time, we're going to come back and close our monthly gap at like 30,000 or come back down here to the 21 moving average at $26,600. So once again, everything on crypto still pointing to the downside, unfortunately. But, maybe that's a buying opportunity long term. Maybe we get a couple month consolidation and then we go to all-time highs. And time cycle analysis works from our previous couple points from the 4-year cycles. Maybe not, though. maybe not. Maybe we already topped out and we front ran our target a little bit. So we'll have to see. So switching over to our Bitstamp chart, you can look at any chart you want on this one. It just so happens to be the one I look at because it has nice price action, price history. Looking at the Bitcoin Bitstamp chart on the daily, still very bearish. Still, once we crossed the 821 to the downside back here at 56,000 was our final point where we left crypto, Bitcoin, etc. We came back, tried to cross it back to the upside, the yellow and red moving average. It failed, got rejected, and then we sold back off, and we've still been unable to cross it back to the upside. We will notice here the exponential blue moving average is also the area where we got rejected. We broke down from that level. We came back up and retested it. It failed. Also, the 821 failed, and then we sold back off. So what's more likely going to happen now? Continuation in the direction of the predominant trend, which obviously once the 821 switched over to the downside, it was down. You could argue that the cross was right here, and this was the retest. We did slightly cross it back to the upside. That's fine either way. But we'll notice now that our 200 simple moving average has been still angled to the upside this whole entire time. And now we are basically to the point where we have lost that slope. Once we lose the slope on the 200 exponential and simple, and price action is obviously below them, we are confirmed into a long-term trending bear market on the daily. So you'll see here we entered into, basically a downtrend on the daily. Here we are now entering into an official bear market on the daily. Is it possible this still gets invalidated? Yes, but we have to cross back above 44,700. So $45,000. And we can invalidate that anytime in the next couple, days, weeks, potentially even a month. But, obviously looking less and less likely as the bulls are dead. They have capitulated, and any that have not are getting ready to. So here we have the Bitcoin weekly chart, and we will see here that, our Bitcoin weekly cross right here, we crossed in our 2017, 2018 high, and then we basically were unable to cross it back to the upside. And from when the cross took place to the bottom was a 68% sell-off. And then it was time cycle wise, like time analysis wise, from the actual cross itself to when we crossed back to the upside was 56 bars. So it was 56 weeks. So it was roughly 1 year of bear market from when the red and yellow moving average, the 821 crossed to the downside to when it crossed back to the upside. So it lost about 60-something% of its value and took about 1 year. So we had that cross take place a couple times here, and it crossed back to the upside, crossed back to the downside, crossed back to the upside. So here, this is like a sideways consolidation kind of chop where moving averages are much less useful. So it's important that during a sideways consolidation, accumulation or distribution phase, that, we don't have a strong trend. Moving averages are much less useful. As we're through this area, once we crossed to the upside, we went absolutely parabolic. How long did that 821 cross last for? Well, we crossed here, and we crossed back to the downside here. We had 56 bars. Oh, that's the exact amount that the bear market lasted for. That's weird. So we had basically 1 year to the upside, and in this case 459%, as opposed to our 7% to the downside. So now from our cross to the downside here, assuming the market starts to trend to the downside, if we take that cross, and we could expect a 56% to the downside move, that would take us down to 17,400. And it's tough to look out that long. I think we can, though. I think we can go out far enough. But let's just say we had a, roughly 60% sell-off or somewhere around there, and we went out 56 weeks into the future. That would give us roughly June of 2022 would be the cross back from the 821 into the bull market. So again, does this have to be clockwork? Is it 100% for sure going to happen? No, but this was 56 weeks and 60% plus to the downside. This was 56 weeks and 460% to the upside. So is there a likelihood that we get 56 weeks and, 60% to the downside? Yeah, maybe. It doesn't have to be though. We can go back and look at another point of reference and look back here. Let's see how long the 2017 bull market lasted for. This one was 124 weeks and 3,584% to the upside. So who knows? Maybe we still have another 56 weeks of bull market left in us. Maybe not. We'll have to see. Did we waste 56 of our bull market, consolidating and trying to break out to new highs and unable to do so? Yeah, you could argue that. Probably did. Probably did. Based on the 821 crosses, we chopped around. But essentially, if you go from the bottom of, let's look at this too, because people are always talking about lengthening cycles and everything. If we look at the actual cross back here to the actual cross right here, 124, 125 weeks. If we look at the actual cross right here and we skip all this chop in the middle, and then we say this is our potential cross now, 114 weeks. So this bull market looks a lot more like this bull market when we take that chop out of here. And you could argue that the only reason this chop was so bad was because of that sell-off, because of the pandemic and everything. So maybe if that didn't happen, we just continue to the upside and this looks much more reliable. But in all reality, if we start comparing them there, that whole lengthening cycles thing goes to garbage. And while we're looking at Bitcoin here, let's talk about that lengthening cycles thing that people are talking about. Bitcoin is going into lengthening cycles. That is literally the stupidest thing I've ever heard in my life. How is Bitcoin going to go into lengthening cycles when there's clearly a built-in algorithm for the halving every 4 years? The 4-year cycle is built into Bitcoin's code. It's built into the white paper. It's literally in the code. It's part of the crypto. So to argue that the cycle is going to lengthen and we're going to get a 5-year cycle or a 6-year cycle is the stupidest thing I've ever heard in my life. The only way you could actually argue that it would make sense is you would say, instead of the Bitcoin cycle only lasting for 4 years and then going into a bear market, that it's going to be 2 of the 4-year cycles. So it's going to be an 8-year cycle. And then I could at least say, okay, that at least makes sense. So maybe the first Bitcoin cycle was 4 years. The second Bitcoin cycle is 2 4-year cycles. So that's 8 years. And then the third Bitcoin cycle is going to be 3 4-year cycles. So, it's 12 years. I could get behind something like that if you're going to argue it. But to sit here and legitimately try to argue as an influencer or a technical analyst that Bitcoin's going to have some 5-year cycle all of a sudden or some 6-year cycle or whatever, literally doesn't make any sense because it's built into the code. So there's a little rant for you guys about the lengthening cycles. Makes no sense at all. Makes literally no sense at all. If you look at Bitcoin's code, it will tell you that it makes no sense. So here on the monthly for Bitcoin, we'll see very clearly, obviously, what took place on the monthly. And again, this will remove some of the noise here because this was our cross to the upside on the 821 monthly. This was our absolute bottom and the cross to the downside on the 821 monthly. And then here we have the cross to the upside. So let's look at those. Here's our cross to the upside. Here's our cross to the downside. Roughly 36 months. So what is that? 3 years, almost perfectly. 3-year bull market to bear market. Or a 3-year, cross to the upside to bottom of the next bear market. And then if we do the same thing from when we cross to the upside here to, I need to move this chart over some. If we do the exact same thing here and we go from where we cross to the upside here to where we would cross to the downside, let's go to 36 months roughly, and that 36 bars. And that would be, remember that when the 821 has crossed to the downside, this was the absolute bottom of the bear market for the first cycle. The 821 cross to the downside here was the absolute bottom for the next bull cycle on those 4-year time periods, not lengthening cycles. So then if this was our cross to the upside and it was exactly 36 bars into the future, that would mean the 821 would be crossing to the downside. Probably not quite that high, probably somewhere a little bit lower, but it would be at May 22nd. So, I'm sorry, May of 2022. So in May of 2022, based on the very few points that we have to take into account, which is this one point right here, basically from the bottom of one cycle to the bottom of one cycle to the bottom of the next cycle, and then to the cross to the bottom of the next cycle, and then to the cross to the bottom of the next cycle. That would tell us that we're going to bottom out. Bitcoin will hit its absolute bottom in May of 2022. Does that mean it can't go to a new all-time high first? No, it does not mean that at all. But there's a lot of other things that tell us it's not going to go to a new all-time high. Which, again, there's tons of ways we can do this. But on the monthly chart, did we ever get below the 8? No, not until the cycle was over. Did we ever get below the 8 here? No, not until the cycle was over. So here we broke below the 8 here, and then here we broke below the 8 here. So in this cycle, we have failed to hold the 8 as support and hold the 21 even as support multiple times. Again, you could say this was because of a black swan event, whatever, that's fine. But regardless, this looks a lot more like a top. Looks a lot more like these previous areas than a bottom. If we were looking for this little double bull run situation here, we would have really wanted the 8 to hold, at least on a monthly, and then pump to the upside. As we're here, we have clearly lost the 8. Now maybe this candle turns into a giant bullish candle and goes up to 64,000, and we do a 100% plus move to the upside on Bitcoin, and then we can look back and say, oh, look at that little guy tried to trick us. Maybe that happens, but more likely than not, Bitcoin has stopped out, and we're just going to be selling off. And if we go back down to our 21 moving average on the monthly, that's, again, going to line up with futures almost perfectly at like 26, 27,000. So, but there you have a little bit of a rant and a lot of bit of some TA and why I don't believe in unicorns. I don't believe in these crazy theories of lengthening cycles and all this BS stuff. You know, if you want to just, anybody that talks about, well, the technicals say this, but I believe this, you sound like Jerome Powell now. You sound like the leader of the Federal Reserve. Well, inflation is up this percent, and all the statistics say one thing, but here at the Fed, we've got a feeling. We believe, we're confident in our feelings. When we reach deep down inside, our hearts tell us that this is going to be transitory. So, I mean, look, decide, do you want to be Jerome Powell or do you want to be, you know, a technical analyst? That's the truth. So, and that's cool if you want to be Jerome Powell. I would never want to be Jerome Powell. You know, he's the next Janet Yellen, right? Or maybe Janet Yellen was the last Jerome Powell. Well, that's actually a fact. But anyway, Bitcoin, Bitstamp, and just a couple different indicator oscillators here. Once again, we'll see on the attar explosion, we're basically in a long consolidation pattern. We're not seeing any direct trend take place. Here on the Fisher Transform, here we're seeing very big green peaks. Very big green peaks. They're getting slightly smaller and smaller. And then we're seeing progressively larger red peaks. So we have a tiny one here, then a decent one here, a decent one here, a little smaller here, and then bigger. And then this is a much bigger area. And then we have much more red. So all through this area when we're in a bull market, we're seeing more and more and more green and just little bits of red. And now here we're seeing much more red taking place and much less green taking place. And then finally, if we look at our on-balance volume, which measures the volume and price to see if there's more buying or selling taking place, we can see on the daily here throughout like the actual consolidation or bear markets, we see more red and sideways action. And then we see a bunch of green in the bull markets, red and sideways action. And then we see all green in the bull markets. And then here we are on the daily, starting to show a decent amount of red tick up here. So, and if we zoom back out and see how that, you know, lines up with price action, we'll see all this red showed up in the consolidation or bear markets. All this red showed up in the consolidation or mini bear market, you know, and then obviously the previous bear market as well. And then if we just switch over to our weekly time frame, which is important to do right now because we're trying to determine long-term trend and what's actually taking place, not just our move for like the next couple of days or weeks or anything. We're looking for months into the future. We'll see here at the top on the attar explosion, we saw a bunch of green followed by a bunch of red. Here we saw a bunch of green followed by a bunch of red, and very clearly, you know, sticks out on the chart, very clearly a peak, very clearly a peak. And if we notice here also, when price action is trending to the upside on the attar explosion, we see all green candles on the volume. And then we see a blue line showing that it's strengthening to the upside. And then when we're starting to lose that strength, it flips over yellow. And then now we see a bunch of red and orange showing that we're bearish. And now we see the blue line once again showing that we are strengthening. But in this case, we're strengthening to the downside. So we're selling off, and we're selling off more violently. Even though the candles aren't showing more violent, it's because there's buying and selling taking place here. So we see quite a bit of volume. As we're through here, we don't see nearly as much volume on this because there's very little selling. There's only buying taking place. Here we see, you know, basically we start topping out. We start seeing buying and selling taking place. Here we start topping out. We see buying and selling taking place. And that corresponds with these big volume candles. In the same way, this does as well. And then once again on the weekly, if we just sort of look at this, we will notice that throughout the bull run, we see only green on the Fisher with just little bits of red. And then throughout the bear market, we see only red through this area. And then we finally see a little peak in green and then less and less red. And then finally we go into a bull market, we see much more green taking place throughout the bull market. And now here we're seeing a very big piece of red starting to show up here. And we would expect more and more red, but still with slight bits of green, just less and less. We could easily have, you know, a peak like this and then comes back up and almost flips back over green. Get a nice little, like, you know, 50 to 100% move to the upside. This move was from $6,000 up to $10,000. So that was a very nice move to the upside. We could easily get one of those to a lower high and then continue to the downside. But, you know, is everybody going to immediately say, this is it, we're going back to new all-time highs, told you so, crypto to the moon? Guaranteed. Guaranteed, that's what they'll all say. Will I say that? No. I will continue to use technical analysis and tell you the truth, not what you want to hear. And then finally, if we go to our on-balance volume indicator, you can see all green through this range, flips over red through the bear market, all green through this range, flips over red, mini bull market, all red. And now here we have crossed back underneath the green, showing you that there's more selling taking place than buying, and that if this continues, we're going to actually see the slope line flip over red, and then this is actually going to be a trending more selling than buying. So right now there's, throughout this area, when this is green, blue right here, that means there's more buying taking place, and then here there's more selling taking place momentarily, and then more buying taking place, more selling taking place, more buying taking place, more selling taking place, buying, selling, buying, selling, buying, selling. But as that's all happening on our blue and pink line here, we're seeing our actual slope line is strengthening, and then it's strengthening all through this range. It's getting more and more parabolic. The slope of the line is just, you know, very, very angled to the upside, very much perpendicular as opposed to horizontal. Once the slope flips to the downside is when we start to see it flips over red, and then the angle, the intensity of that slope tells us how bad that selling is. So here it's very intense. Here we get a little green, and then it kind of goes sideways. We see a little more intensity of selling, and then finally we're able to flip it back over green. So here, even though we're technically still green, we are flipping, showing some red for the first time, and now our slope is basically horizontal. It's basically just going sideways. So if we look up real close here, and it's hard to see, the pink is actually below that green slope line now. So we're actually getting rejected from this area, and if that continues, if more selling takes place, we're going to see this purple or this pink line continue to come down here, and it's going to drag the slope line down like it did here momentarily, and then we're going to see it flip over red, and once again, that's going to be confirmation on the weekly of bear market. So we have very clearly bear market through here, red. We have very clearly bear market through here, red. We have our little mini bear market through here, red, and now we're starting to show signs of our bear market again. And once again, we've been talking about this for months, and now I'm finally hearing people say it. We called the head and shoulders top right here, and then explained how that was looking like it was developing into another head and shoulders top. And now here we have very clearly, you know, this very clearly looks like a left shoulder, a neckline, a head, and then a neckline, and then a right shoulder. And now here we are at the neckline. It very clearly looks like this is turning into a head and shoulders as we predicted, you know, and it was a pathetic attempt at a bounce throughout this area. So, you know, that's showing weakness from the bulls. So when this does sell off, it's probably going to sell off very violently, and we better any believers in crypto better pray to God or whatever you pray to, grasshoppers. I don't care what God, what you believe in. You can pray on Reese's cups if you love them and believe in them. Whatever you worship on this earth, pray to your gold, pray to your silvers, pray to your XRPs, whatever it is, whatever you worship in this world, you better pray that we don't break down below $20,000, because if we do, it's going to be the first time we have ever done that. We have never put in a high and then retested our high with a low. Put in a high, we didn't even come close to retesting our high with a low. So if any of these predictions come true and we take out our previous high, then it's going to really look like this was a 1, a 2, a 3, a 4, and we put in our 5, and now we're going to retrace from the bottom at $2 up to the top at $65,400, and that's where we get ridiculously bad targets to the downside. So pray on your Reese's cups and your XRPs and your silver coins that does not happen. And then finally on the monthly, waddah TAR explosion, we'll see we had very clear blue slope here. We lost the slope and went into a bear market. Very clear blue slope here. We lost the slope and looks like we're going into a bear market. And then once again, entire bull market up. We see divergence between these 2 points here, but we stay in a bull market the whole time. Bear market, bull market up. Divergence between these 2 points, but we stay in a bull market here. Bear market, and then again, we top out here. So do we come back up and put in a divergence point? Maybe. hopefully we get a new all-time high on price action and we don't get an all-time high on the Fisher Transform. But I don't know, that maybe it's possible, but looks less and less likely. And then once again, on the on-balance volume on the monthly, bear market when it's red, bear market when it's red. So, got to be careful. But again, that doesn't happen until basically the capitulation move right here. It doesn't flip over red until, after we've already capitulated here. So even though this hasn't flipped over red yet, does not mean we haven't entered a bear market. This is a very, very lagging indicator of selling. So yeah, that's Bitcoin. And then also I drew in, this is something that I had drawn in the private group, something I've been paying attention to. This is what I'm seeing taking place. The dueling channels. We very clearly have a channel here at the top. That was our high. That was our high. And then at the bottom, our low by closes here. And then we're just hanging out at that low. That also lines up obviously with our key Fibonacci levels. And then here we have a second channel here. Oh, and also, let me make this one a little brighter so we can see it real quick while I'm talking about it. That one, oops, did I do the wrong one? Make that one even brighter. I'll make this one less brighter. Brighter. Okay, so if we look at the blue one here, now it has a bright blue line, and then the green line is the heart line. We'll see that was clearly resistance here, support here, resistance here, resistance here, resistance here. So the heart line itself is like the 50% of the channel. So now, as where before we were staying on the top of the channel with little stabs into the bottom, now we're staying on the bottom of the channel with little stabs into the top. And now we're all the way at the bottom. We're all the way at support. And if we hang out at support long enough, that's basically selling taking place. And then we're just at support, selling, selling, selling. And then eventually there's no more resting orders in the books. There's no more buyers. And then we break down to our next support level. So that's what we have to be careful of. So now if we switch this one over to less thick and scary, and then we switch this one over to more thick and scary, we'll see once again, we have another channel. This one is a descending channel. And here we have a high. We have a high here, depending on what time frame you're at. A high here, depending on what time frame. Here, we find some support here, but it breaks down. High here, and now we're creeping down. And then you'll see at the lows here. And again, it doesn't show up as good depending on what time frame you're on. But if we switch over to like a shorter time frame is when it really shows up. I like this on my 4-hour chart for like actual like trading and scalping. You can see very clearly what is. Let me make it a little bigger. There we go, little fella. Okay, and then we can see very clearly that without a little bit of noise on some of these wicks here where we broke outside of the channel, yeah, okay, that's fine. It's not wick to wick, whatever, but that's how I like it. It's my way or the highway. You see the orange heart line here. We have countless times of support and resistance. I mean, ignoring this little chop through here, that's clearly support. There's support and resistance through here. Clearly support. Broke down from it. Violent sell-off. Clearly resistance, breakdown from it. And then support. Here we got support. Here we have resistance. Here we have resistance. Here we have support. Here we have support. Here we have support. And now we're below it again. And now it's acting as resistance. So if we break down from this back to retest the bottom of our yellow channel, that's going to take us outside of our blue channel for the first time. So that's going to give us a target of like roughly 28,000. Is it going to be another one of these wicks down there? Maybe, but more realistically, we're at the point now where these two channels they're basically fighting for which one counts, which one matters, which one's more important. Before they were both sort of important, but neither one of them was like running the show. Well, if we look at what's the pattern that's like actually drawing on our chart here, what do those two channels fighting each other like show us overall? Well, again, I'm going to sort of cherry pick how I draw this just to show my like point what's going on. But, essentially, what do we have here? We have basically this descending triangle taking place. So again, that's not how you would like correctly normally draw the descending triangle, but this is going to give us a very clear idea as to what the actual pattern we're developing is. So we have now, with the exception of like this stab out of the top, which makes this descending triangle look like sort of janky, but we can very clearly see this is our descending triangle. And if we look at a lot of the altcoins, actually, it's much more clear Bitcoin for once is giving us a less clear picture, as where typically the altcoins give us a less clear picture and Bitcoin gives us a more clear picture. So, and we can kind of look at that in a moment as well. But we'll see that that support line that we're basically hanging on to, the bottom of that channel that we're hanging on to, is also that key Fibonacci level from the macro. That's our future fib, the one that, you know, we used for the example earlier, that lines up with our little rainbow supports here. And if we break down from that 236, which is very important because this is from our low of the bear market to our high of the bull market. So what happens? How do you determine if a Fibonacci is reliable, if it's taking place, if we can expect further moves? Well, the Fibonacci becomes validated when you take the low, swing low to the swing high, and then you touch the 236, the first fib target. Once that happens, you can validate it. So while we could still oscillate between the 236 and the 0, more likely than not, if we have topped out here, our next target will be to the downside, to our next Fibonacci target, which in this case is going to be obviously the 382. So if we look at where the 382 is in line with on Bitcoin, we can see the 382 is at $20,398. So that was our all-time high from our previous bull market, and is also the 382 of this bull market, or of this Fibonacci retracement. So if we break down to this level, and we do not want to see 20,000 violated. If 20,000 gets violated, I promise you that this is a change in structure, a change in behavior, and is more likely than not something that we've never, well, it's a fact. It's something we've never seen before. The previous all-time high getting violated by the bear market of after we make a new all-time high. So if we break down to this 382, which is our likely target, we're more likely than not going to find support immediately, a reaction rally off that $20,000 mark for sure. Maybe we front run it and we don't get down all that way and we save this trend. But the real scary thing is when we start looking at, and this is where I'll lose subscribers and everybody gets mad at me and I hurt people's feelings and they just don't like me anymore because I'm bearish and I don't like Bitcoin and I'm mean to their investments. This looks like a 1, that looks like a 2, this looks like a 3, that looks like a 4, and then of course this is our 5, and maybe I'm just using my imagination and I'm just making stuff up. But if we look at our retracements from those previous levels as well, we will notice from our first bottom back here at $2, and this is Elliott wave if you're not familiar with that. Once we sell off, we come down to our 236. We break down from the 236, but do not come all the way down to the 382, which is where we bottom out. And then we continue on our bull run to our next target. So we bottom out just a little above the 382, which is a bullish retracement based on Fibonacci. And then if we take from our bottom of that one to our top of that one, and again, this is going to get, let me delete this one really quick. We will notice that we come down exactly from our top to our 382. So we come down to our 236, similar to what's happening right now. We hang out at the 236 for a while, and then finally we capitulate and sell off to the 382, which is what I'm anticipating, what we just discussed. From that 382, we then go into our next bull market. We will also notice that this is a 4-year cycle taking place from here to here. This is a 4-year cycle taking place from here to here. That's our halving cycle, not a lengthening cycle, not some fantasy world situation where crazy stuff happens and we just make up reasons why it's going to happen instead of using actual math and science and previous price action, but like, you know, real life stuff. So if we get rid of that one now, and then we say from the bottom of that one to the top of the next one, we are hanging out now at the 236. The last time we hung out at the 236, we capitulated down to the 382, and that was our all-time low for that cycle. So if we capitulate here to the 382, it would do, you know, maybe we don't quite go to the 382 and we do what we did this bull market. Maybe we go exactly to the 382 and we do what we did this bull market. But now, when we look at this whole structure as a 1 through 5 cycle, what that tells us is the Fibonacci extensions, Fibonacci targets of our 5-wave structure based on Elliott wave and Fibonacci techniques combined. It tells us that when we sell off our 5th wave, the first wave we sell off between the 236 and the 382. The second wave we sell off to the 382 perfectly. The third wave we initially sell off to the 382, but then what actually happens based on Elliott wave theory is we sell off the entire range. And this is where everyone gets wrecked, because they're expecting a sell-off only to the 382 of the fifth wave and don't realize that we're now retracing the entire five-wave structure. So when we retrace the five-wave structure completely, we sell off not only that wave, not only wave 3, not only wave 5, but we sell off a percentage from the bottom of the 0 all the way up to the top of the 5. So in this case, from the bottom of the 0 to the top of the 5 would take us down initially to the 236 of the entire five-wave structure. Let me pull this out a little more so it's a little more clear. The 236 of the entire five-wave structure is our initial target for the sell-off for a bullish retracement. That's $5,811. If we go down to the 382 of that structure, that also coincidentally that 5,560 is also the level we hung out at before the capitulation, which was the 382 of the wave 3. Okay, that's the 236. So coincidentally also, the 382 is the top of the first bull market, and then the 0.5 is also the bottom where we hang out and then capitulate down to. And then of course the 618 of the entire structure is basically where we capitulate down to on the wave 1. So if we have our sell-off now, let's just sort of draw it on here so we can kind of see, and I can make sure that I lose some subscribers. Let's say we initially sell off down here to our 382, which is what we're expecting, and then we get a slight bounce back up to the upside, and then we get a 236 retracement. That would be, you know, our best case scenario for a retracement. Now let's get a little bit more realistic here. If this is correct, and again, I know this is going to hurt people's feelings, but if we sell off initially to the 236 and then we get a push back up to the upside and then we sell off to the 382, it's going to hit our target of $1,300, $1,300. So, you know, I know people don't believe this. I know they don't want to believe this. They don't want to believe it's possible, but this right here is a textbook 5-wave Elliott wave structure with Fibonacci retracements based on previous price action and targets. So there you have it. Please make sure that you like and unsubscribe if this makes you sad or it makes you feel funny in your pants and you don't want to hear my voice anymore. But the truth hurts. And my job is not to make you feel good about yourself. My job is not to make you happy. My job is to show you how to do technical analysis and what the potential targets are to the up and downside and what could actually happen. Not what we want to happen, not what we think is going to happen, but what is most likely to happen. So I'll give you guys a moment to unsubscribe while I get ready to do our next chart here. And if you do like hearing the actual truth and what's potentially going to happen and you're not already a subscriber, please feel free to like and subscribe. Share this with your friends. Share this with your, you know, trolling friends who don't think price action is going lower, etc., because it'll make them mad and sad. And then we'll go on to Ethereum. So here's our ETH target next, Ethereum, and then I'll jump over in the chat here soon as well, and we'll take a little break. So I'm going to run through these last couple cryptos, and then we'll Gensaki circle back to our other assets. Ethereum on the daily. You know, we've talked about this quite a bit. Ethereum was staying fairly bullish in comparison to most cryptos, but you know, Ethereum is one of the ones that has a very clear chart. We can use this much more accurately. We can take the bottom of our capitulation sell-off and then our top, and we can take our bottom of our next one and then our next top, and I will get rid of the moving averages for just a moment, and we can see very clearly a descending triangle, bottom to top to bottom to top. And this is very clearly a descending triangle, very clearly a bearish pattern. And then once we come back down and break from that, you know, the measure moves to the downside could be very violent. In the same way that this was potentially looking like an ascending triangle, and we could have broken to the top, but we did not. We broke to the bottom. This could very easily also look like a bearish pattern, and then we could break up from here. So, you know, anything can happen. It's important that we pay attention to what could happen, not what we want to happen or what we think is going to happen, although those are also nice to look at. Ethereum has broken down officially from the 200 exponential and simple on the daily. It is showing some signs of life on the daily, but let's be real, it's just going to do what Bitcoin does. It did not put in a new low here, as where Bitcoin did on futures and spot markets, but is still bearish. On the weekly, Ethereum finally has gotten the 821 cross to the downside. It could be averted by getting above 2,150, but at this point in time, we've saw only red histograms from the bears. The slope line, we are well below it with the histograms, and it looks like it's about to flip over red. We have the divergence sell by sell signal, left the bullish control zone, and have done nothing but take distribution take place. We also are down inside of the bearish control zone now. Next target on Ethereum to the downside, $1,552. After that, you know, potentially as low as $1,200. And then we have our 200 exponentials down here in like the $750 range. And to all the people who say, it can't get down to $750, well, not that long ago, I bought Ethereum for 85 bucks. So I'm pretty sure it can get down to $700. Just because you bought at $4,400 does not mean that it can't go back down low. In the monthly on Ethereum, we have left the bullish control zone, we have the hard sell signal, and we're seeing our first monthly red histogram. We have sold off down to the 8 EMA, and our next target to the downside is going to be the previous all-time high top on candle closes on the monthly, and also our 21 moving average right around between basically $1,100 and $1,200, somewhere around there. So looking very, very likely at this point in time. Again, we still have plenty of time left in this month, and Ethereum is one of the more bullish cryptos, but still looks bad. Doggy Dogecoin, no life. It tried to push up here. It got a very, very powerful daily candle push to the upside. From the low to the high, 46% move to the upside, and completely got sold into and is right back where it started. This is a hard rejection. This is literally someone pumping up the price to try to get out of their position and then just dumping on the face of all the idiots who bought into this. And now we're right back where we started. So, you know, basically just a quick way to get psyched out. All these people thought we were going to break out to the upside, never even put in a new high. We have a high, we have a low, we have a lower high, we have a lower low. We now have a lower high once again, and then I would expect, you know, or you could go from this lower high either way, but we're very likely going to put in a lower low once again. We could probably draw in some type of, let's get rid of all this junk. I don't like any of this. Yeah. Okay. Let's put in a little channel, and we can kind of see what's going on here. See if that looks realistic. Again, this is obviously very likely like a descending triangle type situation, but we can get a pretty clear kind of channel here. Let's turn off our moving averages. You know, we're basically operating inside this channel. You know, we have a couple stabs out here on the downside, couple wicks out, and now we have a nice little wick out to the upside. But very clearly, I mean, to me, this looks like what's taking place. Maybe you're bullish and you say, no, we already broke out. We're going up higher. Maybe we are. But why did this just get horribly rejected like that? I think more realistically, that's what people were looking at. But this is what's actually going on with Doggy Dogecoin. So, yeah. Polkadot, you know, these all look terrible. Let's just go to a longer time frame. It's obviously very clearly in a bear market. We spoke about if it was going to break down from $14, it was going to go straight down to this wick support level at $12, and the next breakdown from there is going to be somewhere around $8, and then after that, maybe this previous high of like $6. I mean, this looks terrible. If you're not out of Polkadot, I don't know what you're freaking waiting on. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. You know, we lost 821 across the downside on the weekly at like $26. So you could have easily gotten out at like 20 bucks and saved yourself another like $8 per coin loss. Very bearish, all bearish, everything bearish. All bearish everything, all bearish everything. Yeah, so Polkadot. Oh no, Polkadot. Oh no, I'm never gonna buy a house with my Polkadot money. Oh, Polkadot, you were supposed to go to the moon. Chainlink, you know, same thing, bearish, all bearish everything. We're not even looking at daily. Daily's pointless. Let's look at the weekly. The weekly has broken down, got the 821 across the downside. You know, I mean, could have got in this thing on the 821 across the upside at $2.69 or, you know, $3 and something cents with me. And then, you know, we could have gotten out anywhere around here at like 30 bucks for a 10x. But, you know, it is what it is. This thing is very violently selling off below the 89 now. We're just now developing our 200 moving average here. So next target to the downside based on the moving average, $6.80 for Chainlink. No, it'll never go to $6. Well, if you bought it at $3, it's a possibility it goes to $6. If you bought it up here at $55, you probably don't think it can go to $6, but I promise you it can. More realistically, though, I think we would find some support along the way, somewhere around like 10 bucks. Nice round number. Hopefully we don't break down from this level, but again, very clear descending triangle. We have a low here. We have the same low here. We have another low here. We have a, you know, high here. We have a lower high here. We have a lower high here. You know, very clearly, this is a descending triangle, and the breakdown from that would take us down here to our target. So get ready to lose all the rest of your money. Uniswap, Uni, again, getting rid of all this drawing tools. Looks terrible, looks absolutely terrible. Same exact pattern playing out here. Wow, this is weird. All these shit coins that should be amazing and do their own things because they're all amazing and they have the white papers and they're going to the moon. They all have the exact same chart. Descending triangle very clearly. Got the 821 cross on the weekly to the downside. Once again, we have closed lower on the weekly. We're now at a new weekly close. Where is our support on Uniswap? Well, there's none. There's none. There's 1 week here, 1 week here, 1 week here, 1 week here, 1 week here. So the same way we stair-stepped up, I think we're going to stair-step down. We could use Fibonacci targets, but we could realistically just say it's going to $12 next, and then it's going to $8, 75 cents after that, and then it's going to $5.80 after that, and then it's going to zero. Oh wait, Uniswap's going to zero. Probably not going to zero. I actually do like Uniswap, but do not like its chart because it looks like, say it with me now, on 3, 1, 2, 3, it looks like shit. Bitcoin dominance on the weekly. Looks like it's carving out a bottom here. We've talked about this a million times. It was consolidating at the 8 moving average. Looks like it's trying to move up here. Next target for Bitcoin dominance to the upside is 50% of the market. After that, our 55 exponential, or we've got a bunch of other exponentials right above it, somewhere around 55%. Not unrealistic to think that Bitcoin is going to move. Bitcoin dominance is going to move to the upside. All green histograms moving to the upside. Hard buy signal, cross on the Stokes, leaving the bearish control zone. Every time we've gotten that same signal in the past, we've gotten a massive move, massive move, massive move, massive move. But keep in mind that we are still in a downtrend, and there's always going to be more shitcoins, and they're always going to be taken away from Bitcoin Daddy on the long term. Total crypto cap. Obviously we know how this all worked out here. Let's switch back to the weekly because no one cares about the daily. Crypto cap went into a bull market at 218 billion, went into a bear market at 1.55 trillion, topped out here at 2.59 trillion. We have the 821 cross to the downside on crypto cap. We are closing lower and lower weekly crypto cap candles. So we are losing, continually just bleeding out. We're bleeding out value in the crypto space. The crypto space has been mortally wounded. It has had its throat slit, and it is just bleeding out. It's not dead yet, but it's losing blood. It's not looking too good. Okay, so, but we're still in a bull run. I'm sure we're probably going to new all-time highs any day now, any day, probably tomorrow, honestly. Next target to the downside, a retest of that 1.15 trillion. After that, 927 billion. I mean, if we go from 2.5 trillion down to under 1 trillion again, I mean, what do you think smart money is going to do? The whole argument was once crypto is above 1 trillion, once Bitcoin's market cap is above 1 trillion, then it's legitimized. Well, what happens when it falls back below 1 trillion? Because it goes both ways, ladies and gentlemen. You want to legitimize it when it goes above. When it goes below, it's delegitimized, it's unlegitimized, it's no longer legit. It's too legit to quit. It's I don't even know. I mean, what's up? It's all bearish. Sell by sell. Left the bullish control zone. In the bearish control zone. No love. No life from the bulls. We have literally only sold off. All red histograms. Lost the slope line. I mean, crypto cap looks terrible. All crypto looks terrible. Everything. Hard sell signal. Leaving the bullish control zone on the monthly. 2 red histograms in a row. That is a hard exit. That's a hard pass on crypto, quote unquote, investing. Or let's call it what it really is. Crypto speculating. Or Moon Boy Gambit. We're about to go into a basically year bear market on the crypto market cap. So I remember when this thing hit 80 billion. I remember when crypto market cap went down to 80 billion and the whole world forgot about crypto and no one believed in it anymore. So if you think that it can't sell off violently from 1.27 trillion more, talk to me when everybody else has forgot about it. When you forgot about crypto, you're not even looking at charts online. You don't even remember what cryptos you invested in. You've lost 95% of their value. MicroStrategy has gone to zero. Michael Saylor has disappeared from the earth. Whatever. It is what it is. Coinbase, again, we talked about Coinbase out of these positions. This thing has capitulated. It got to move to the upside, selling back off. Looks terrible. I told the group I was exiting Coinbase. I told the channel I was exiting Coinbase. This thing massively underperformed. I'm still bullish on it long run, but we got to really, this thing sold off to Fibonacci extension targets that, we thought was impossible. the 4.236 of the initial sell down. So at this point in time, we can expect it's going to put in a new low. And at that point in time, we can just look at what our Fibonacci extension targets to the downside are going to be. Let's go from our low right here to our little high, our pathetic little push up to the upside. The next target on Coinbase down at $200, which, we kind of expected it to get there eventually anyway. 196, the 1.5 at 184, the 1.618 at 179. I mean, how low can you go? How low can you go? Coinbase looks terrible. Looks absolutely terrible. Looks horrible. Terrible. Coinbase looking terrible. Definitely going lower. Very much lower. Maybe it holds this area though, and I'm wrong. But right now, not interested in. I don't want to just hodl. I'm not just going to hope and dream. Riot blockchain, again, looks terrible. Was operating inside of a channel. Tried to get a breakout to the upside. Looks absolutely horrible. Looks to me like a little double top being put in right here. We broke down from a key support right here. Could not get back above it. Getting rejected. Typically, when you break down from a support in a descending triangle, you hit the measure move. You retest the breakdown. If you cannot get above the breakdown, if you cannot flip what was resistance into support and get back above it, that means you have flipped your support into resistance and you're going to sell off lower. Where is lower? Well, probably down here to like $11.50. So there's going to be a riot when Riot blockchain hits $11.50 for the people that bought at $80. Riot's going to zero. Not really, but I don't know. Maybe. It's just a matter of time before all this crypto magically disappears and companies close down and scams start coming out. I mean, this can only go on for so long before the whole space just implodes on itself. I'm not saying crypto is completely going away, but a bunch of these shit coins, a bunch of these like publicly traded companies and Bitcoin mining and fake ETFs, you're going to start seeing scams and things happening and over leveraged positions getting liquidated and companies calling for bankruptcy. It happened in the last bear run. Apparently people don't remember. They haven't been in the space long enough, but MicroStrategy, God, crypto is so negative. I feel like I'm like yelling at my kids or something like, you're bad. Don't steal. Don't fight your sister. Like, it's like crypto is so terrible. I'm like, do technical analysis on it. It makes me sad. And I shouldn't be sad because I got out of crypto. I made a bunch of money on crypto. I'm not hodling, okay? But just looking at these charts just makes me sad. That's why I left off XRP today. It looks so bad. I didn't want to hurt anyone else's feelings. I didn't want to lose any more subscribers talking about XRP and how bad it is. But now here we are anyway. MicroStrategy, same thing. We broke down from support, okay? You could argue that, we had a couple little support areas we were trying to hang on to. I like this one right here. We broke down from support on this descending triangle of Michael Saylor scam coin, and then we broke up, tried to get above it, failed, and now we're selling back off. Very soon, we're going to put in a new low on Michael Saylor's fake Bitcoin ETF, fake company, and soon he will get liquidated. His positions will get liquidated. It will turn out that he was over leveraged and, his company will go bankrupt or back down to $2 or something. It's just a matter of time. It is what it is. So descending triangle breakdown, retest, fail to get back above it. We're going to sell back off from that. Again, this is just like the worst version of a Bitcoin chart. The same way like Riot blockchain is like the worst version of a Bitcoin chart. They're underperforming compared to Bitcoin. Overperformed, and now you would expect them to underperform. Or overperform to the downside. So next target to downside on this, I mean, who even cares? $338. After that, maybe like $250. I mean, looks absolutely terrible. Michael Saylor, total idiot. He was in profit, should have took profits, but instead he's just going to hodl. 10 years from now, maybe he's doing the right thing. But would you rather buy $2.4 billion worth of Bitcoin at a dollar cost basis or cost basis of $26,000, or would you rather buy it at $20,000 or $10,000 or $1,300? I'd rather get it at $1,300. Will that happen? Probably not. Is it possible? Yep. If you know anything, you'd be using technicals, not your feelings about Bitcoin and Twitter and tweet. And I'm part of the laser eyes. We got laser eyes. Yay. What's the emoji going to be once Michael Saylor's negative? Does it go from laser eyes to like poop emoji over his face? Like what is like I can't wait to see what that is. Okay, so Michael Saylor, MicroStrategy, 821 cross on the weekly to the downside. I mean, this thing is literally just dying. It's just dying. They're buying more Bitcoin and somehow it's still capitulating. I wonder how. All right, let's look at our meme stocks next. GME, GameStop, yay. Okay, it's doing exactly what we said. 821 across the downside, selling off violently. Tried to get a bounce here, rejected. Continuing to the downside. We did get the buy signal and the sell signal. It's possible we get the buy signal and exit the bearish control zone, but I'm seeing no life from this thing. All red histograms since the top up here. Very clear, bearish divergence, rejection at the top, two very bearish candles. We have the sell by sell divergence signal on the daily at the absolute top at $303. We have since lost over 50% of our value. We have seen only red histograms. We now have a red slope line, and if we switch over to our weekly time frame, we will notice we are very, very close to losing the 821. If we lose the 821 to the downside, that's going to give GameStop a target of $108. $108. We are very, very close to selling off and breaking down from here. So hope you like living in your mom's basement. No, I don't want to live there anymore. My stepdad's mean. Oh, should have stole by GameStop at $600. Now I'm poor again. Oh, I lost everything because of options. Oh. AMC apes they're doing a fantastic job at diamond handing it up. We have broke down from a very key support line. The next target for AMC is $25. So let's see. When did we call AMC? Well, once we lost 821 to the downside at $50, we called it. Since we lost that, we have lost like 33% of our value, and very soon we'll be down here and we will have lost 25% of our value. So if you're using your leverage or using your options on AMC, you're probably getting liquidated left and right. If you haven't got liquidated already, you're very soon going to be liquidated. And then after that, AMC maybe go down to like $20. I'm sure we'll see some bouncing along the way, but AMC looks absolutely terrible. The apes are sick. They spent too much time throwing poop at each other and peeing each other's mouths, and the circle jerk is over, and now they're just all standing there with dirty hands, sad and feeling sort of dirty and gross, and they lost all their money, and they're definitely not winners. So AMC looks terrible. Still holding on for now, but $25 to $29 definitely looking very probable. So good job, guys. Diamond hands, yay. Bed Bath & Beyond obviously did what we said, broke down from our symmetrical triangle. It's looking like it's going to put in that descending triangle. Definitely some support here at the 200 moving averages, but $23 looks very likely. After that, maybe we get a dead cat bounce. Maybe we just capitulate down from it. Don't want to break down from this level. The percentages aren't like crazy, but we could easily be at $20 with this one. All these meme stocks doing the same thing. DraftKings. So once again, Kathy Wood did a phenomenal job. She bought DraftKings at $46, and now here we are, down only 6.6% at $43. DraftKings very clearly in a descending triangle, or in a bearish downtrend. We have crossed 821 to the downside. We're below the 200 exponential and simple moving averages. Apparently, all the people that Kathy Wood hires to help her out with all her funds, none of them do technical analysis. Not one of them could look at a weekly chart and tell you that the 821 has crossed the downside. It's getting rejected off of the 21 moving average, breaking down from the 50-55 moving average, and the next target for DraftKings is $36. So I don't know. All the people she hires straight out of college, apparently none of them have any real life situations. The problem is all these people that are doing all this technical analysis or fundamental analysis or financial advisors, they've never been through an actual bear market before. They think that things just go down and then immediately go back up. So you just buy the dip and you win. That's not how real life works. It's just what people remember because they've only been investing for so long. But in all reality, you're speculating on trash. Newegg, the newest meme stock, new high, breaks down, gets rejected. I imagine it's just going to sell right back off to $26. After that, it's going straight back down to $18. I mean, these are daily candles. So you have 1, 2, 3, 4, 5 days worth of support. So when we break down, we're going to break down, find support at the top of this candle. Next target is going to be $19.91. So next target to the downside is just going to be right here. That's where we expect to go. So see you there. See you soon. Probably in the next couple days, based on how long it's taken to sell off. I would say probably in like the next 2 days. At which point in time, sure, maybe you want to take a little scalpy scalp. Maybe I take a little buy off this area. Probably not though. I mean, actually, I kind of like Newegg, but the truth is, like, when something sells off or something goes up that quickly, expect it to sell off like parabolically, because after that, it's really just 1 day candle, and you're right down here at $10. So, is it possible it just blows straight through $20 and goes straight down to 10? And like, what percentage is this thing going down? Like, from the top to where, it sold off 66%. So 66% down once, and then from the next top to the next target, another 43% down. And then, maybe that thing bounces back up to here and then goes down to our next target, another 59% down. How many times can you lose 60% of your money? All right, so there we have our meme stocks and our cryptos. What should we do? Something else real quick? Or should we take a little break? I'm going to jump over in chat and see what's going on, interact with you guys for a little bit. And then I think we'll take a little break after that. Our kit says, that's why I'm shorting. Yeah, not a bad idea, my man. Not a bad idea. Obviously not financial advice. I'm not your financial advisor. CW says, remind us to smash the like button. Smash the like button. Yeah, smash the like button, my dudes. And possible ladies and even lady dudes, whatever. Whoever's out there. If you can hear me now, smash that like. Pound it. Smash the like button, says Native Warrior. Good to see you, brother. Good to see you, CW. Our kits. Do you ever chart relationship between stocks? Example, SPY, TLT, and any thoughts on the topic? Yeah, I've charted quite a few different relationships between quite a few different things. And the truth is, you can find some definite patterns, correlations, and stuff like that. You can see definite like trends and everything, but the majority of them are obvious. You know what I mean? Like as one goes up, the other will go down, or as one goes up, the other one goes up, but basically like a leverage version of it. But overall, the truth is, like, even if you look at, when a big dump comes, like look at the Black Swan Rona dump. What happened? You look at the correlation between crypto, traditional stock market, and gold, silver, and they all sell off. You look at how they sell off though. Stock market was like 33 to 50%, index wise. Crypto was like, 50 to 75%, depending on what you're looking at. And then, gold was like 25 to 30%. And then silver, you're going to get like obviously the exponential move. Silver sold off like, almost 50%. So, in the end, they all basically move together. But when you look at the correlation, you look at the relationship between those things, is when you realize that people who quote unquote think they're diversified are not actually diversified. Because you know what didn't sell off during that time frame? You know what didn't lose strength during that time frame? Dollars, bonds. You know what I mean? There's certain things that have an inverse relation, or like people like run to safety. Like, when there's like a world ending event and nobody knows what's going to happen, you looked at the bond chart, bonds went absolutely parabolic, but they saw like crazy amount of like volatility. Dollars, same thing. Everybody else, like, dollars been selling off forever. And then all of a sudden you see like this massive spike in dollars. It's the same type of thing. It's like, oh, the world's going to end. What's the safest place to be right now? Out of everything that's dumping. So where do you run to? Well, stocks and bonds obviously have, for the longest time, up until the last, like, 30, 40 years, that was the way you invest was always like, 50-50 stocks to bonds, or 30-70 stocks to bonds, or, whatever. You could argue like the take your age, and that's your percentage that you should be in bonds over stocks. So, if you're 75 years old, you want 75 bonds to stocks. If you're 25 years old, you want 25 bonds to stocks. So depending on like risk on, risk off, and like overall portfolio weight, and if you're just stocks and bonds, etc., there's different ways you can use that. But over the last like 30, 40 years, bonds have been all but useless because rates are so low. It's like not even, I mean, it is what it is. But, if you look at the chart, bonds have been just going parabolic, and bond yields have been just absolutely dying. So if all of a sudden we go into an environment where that's the difference, where rates start going up and we see like a Paul Volcker moment where, you know, rates go to like 20% and bonds start like massively selling off, I mean, you know, things could change quickly. And that's why it's so important to have like the relationship. And even things like gold and silver, when you look at the relationship between gold and silver, that's a chart, you know, we could jump into these and start going over them. Gold, obviously, you know, still looking bearish. Overall, decent. It's sort of reclaimed the 200 exponential simple moving average, sort of getting the 821 cross back to the upside. So on shorter time frames, doesn't look bad. But on the weekly, you know, basically sold off the weekly here, lost the slope, got it back here, and then we lost it again, and we sold back off to it. If we consolidate here long enough, maybe we continue to the upside. But more likely than not, it looks like we got a top right here, came back up, retested the slope line here, got rejected, and now we're just going to sell off here. So I think very soon we'll be back at $1,700, and then after that, we got to start looking at some of these other levels like 1,500 or some of these moving averages. And I'll show you where I'm getting to with this. I'm going to do the silver chart real quick. Silver has been looking good through this area, basically trading sideways in this channel, but now it's starting to show some weakness. It's now barely above its 200 exponential and simple. And then if we switch over to the weekly, silver never crossed the 821 to the downside this whole entire time, even though gold did and saved it a couple times. And now here silver has crossed the 821 on the weekly to the downside. That's extremely bearish. So that tells me silver was able to maintain strength for months since it topped out back in August of 2020, and now here it has lost that. So what happens typically when this 821, algos flip, and they're going to start selling silver. So next target is $24. After that, $23. 200 exponential down here, 200 simple down here. You know, 18 to 20 bucks looks very likely on silver. I think 22, 23 is probably our next main target. But this looks very, very bad now. We now have the hard sell signal, the divergence signal through this range. We now have all red histograms, rejection and flip the slope line over red. And we have the 821 cross on the silver chart. Silver looks bad right now. It looks absolutely horrible. The silver squeeze failed horribly. So now this is my point about the correlation though between these things. This is our gold silver chart, XAU to XAG. And I've been talking about this for a while, and while it was telling me that gold and silver were going to go down, because there's only two ways. This chart right here, gold lost value compared to silver on the 821 cross back here at 100. Here in June of 2020, 100 pieces of silver was equal to 1 piece of gold based on prices. And then we went down and down and down, and we got down to a low of 63 pieces of silver per piece of gold. And now here we are crossing the 821 back to the upside now. So gold is now going back into an uptrend in relation to silver on the weekly chart for the first time since June of 2020. So for a year it's been in a downtrend, and now it's about to go back in an uptrend. We're at 70 pieces of silver, gets you 1 piece of gold now. And then if we look at all green histograms, bullish divergence, hard buy signal coming out of the bearish control zone, 821 crossing to the upside. We still have a bunch of moving averages above our head acting as resistance, but we now have a blue slope line on the weekly. This looks very likely that it's going to go up here and put in. Now we'll take off the moving averages. We have a very clear like descending wedge, another descending wedge right here. We've broken out of it, and now we expect to get our measure move up to 83 silvers per gold, or 87 silvers per gold, or our 0.5 or 618 retrace, you know, basically of the sell-off in all reality, something like that, of like 89 to 97 pieces of silver per piece of gold. So all the people that are saying, I'm buying silver. Well, this chart says, don't buy silver, buy gold. And realistically, the gold and silver charts both say, don't buy silver or gold. So this says, the gold and silver chart both say, don't buy silver, don't buy gold. And then the gold to silver ratio says, if you're going to buy silver or you're going to buy gold, not silver. So while neither one of them looks bullish right now, this chart tells you that gold is going to retain its value better than silver is. So the only way this happens right now, gold gets more valuable compared to silver is gold sells off and silver sells off exponentially worse, which typically happens when gold sells off. Or gold goes up, but silver goes up much less, which typically only happens at the beginning of a gold bull market, which is also possible. That's fine. It's definitely a possibility. Or gold goes sideways and silver goes down, or gold goes up and silver goes sideways. But in all reality, this chart is telling us you want to be in gold right now, not silver. But I don't see that argument being said. And the truth is, if we zoom out and look at the macro picture right here, and we look at the real deal, like what's actually going on, and again, this is kind of messy here, but we'll notice that if we go back to that peak high in 2008, gold went to an all-time high compared to silver at 90 pieces of gold per silver. And then after that, it sold off 66%. Gold topped out and then lost 66% of its value compared to silver. But it put in an A, B, C retracement pattern. And we can see the ratio goes way, if this was a longer chart, you'd see. And then here we did the same thing. We topped at an all-time high of 130 pieces of silver to gold. So if we lost another 66% of our value, that would take us down to roughly 41 pieces of silver per piece of gold. So long term, gold has been gaining value compared to silver, but after its peak parabolic high here, it lost a ton of that value. It gave a ton of it back. So while I think we're going to go up here very high to like 89 after that 130 all-time high, afterwards, I think we're likely to go down somewhere around like, this 40 to 35 pieces of silver to gold. So the idea is it's better to have silver than gold long term. If we're looking out like a few more years, yeah, for sure. But short term, in this next year, it looks more likely that we want to have gold than silver. And then we want to switch our gold into silver when we top out here. And then we want to, make that money on the way down. And then once we're down here at the lows, we want to switch our silver back into gold. And that's how you can essentially trade these relationships. The same way you could trade like Bitcoin, Ethereum relationship, same way you could trade like any precious metal or any like, the Dow to gold ratio. I'm sure you've heard of that before. I specifically have talked about how in the past, the Dow Jones Industrial Average and gold have always come back into a line at 1-to-1 ratio. So if Dow's at like over 30-something thousand now and gold's at only 2,000 now, well, one of two things happens. Either gold goes way up to 30,000, well, one of three things. Dow goes way down to 2,000, or they meet somewhere in the middle. So maybe gold goes up to like 7 or 8,000, Dow goes down to 7 or 8,000, and then they go back into line at 1-to-1 ratio, which I think is very likely going to happen. Is it going to be at 8,000? I think so. I don't know so though. Maybe it's at 12,000. Maybe it's at 16,000. We'll have to wait and see. So. Next we have platinum. Platinum it's trying to hang on to its 200 exponential and simple moving average, but it looks bad to me. Short term, it looks okay on the daily. Overall, platinum looks like probably one of the best metals, but it got the 821 cross to the downside, got a massive rejection candle right here, a massive shooting star. Looks like it's headed back down to a new low. All red histograms crossed over the slope line red, getting ready to enter into the bearish control zone. Platinum is definitely struggling. It is struggling. It's very much underperforming. But that's what we want to buy. We want to buy stuff after it's been underperforming. I don't want to buy stuff after it's been overperforming and it's topping out. I want to buy stuff at the bottom of underperforming trends. In case you're just tuning in too, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'm just some dude on the internet looking at colors and talking about it out loud for entertainment purposes only. Tilray and pot stocks, we talked about this already in the group. I give you guys the heads up, and then also on the channel. I have lost any hope in these on the short term. They're very clearly in descending triangles. We're retesting now at the support level. I expect these to break down much lower. We talked about Tilray specifically. I think more likely than not is headed down to like $10, maybe lower than that. I do not like how these things are looking. They look terrible and they've been underperforming. So if the whole market starts to sell off and we start to see weakness, $12.60, and then after that maybe $8, I'd rather get it down there. I'm not interested in this price action right now. I'm just not interested in pot stocks right now. ACB, same thing. We're already back down at $7 back at our entry. Definitely glad we took profits along the way. This thing looks like it's going to continue to the downside, and when it does, look at this weekly. It tried to cross the 821 to the upside, got rejected, tried to cross the upside, got rejected. I think more likely than not, we're coming back down here. Are we coming down to $5.25? Are we coming back down to $3.75? I don't know, but this thing looks bad. It's been an underperformer for a little there. It looked bullish on some time frames. Definitely nice little 30 to 50% moves to the upside, but look, I'm not just going to give it all away. Canopy growth looks even worse. It has broken down already from those levels. Maybe this is the canary in the coal mine for what the rest of these cannabis stocks are going to do. It was the weakest throughout this range, saw the weakest bounce, and now it's already at a new low, as where the other ones are basically fighting to hang on to that low. You know, this thing very likely could come down here to like 14 bucks. Maybe it comes back down here to 9 bucks. Canopy looks absolutely terrible. URA, you know, we talked about this already. Uranium ETF breaking down. Next target, 18 bucks. I mean, these things could just get absolutely wrecked. URA looks terrible. UEC, same thing, looks very bad. Broken down from key levels, hanging on to some Fibonacci levels, already down at the macro 382. Next target, macro 0.5, $1.73. Maybe the 618, $1.45. I mean, these things look horrible. They look absolutely terrible. This is our 1 of the 5-wave structure. This is our 2 of the 5-wave structure. We could very easily come all the way back down to like $1.20 and retest the top of the 1 with the bottom of the 4. So do I think that's going to happen? Probably not. I think we'll probably find some strength somewhere around here, but this looks very bad. Uranium looks very bad. All this stuff does. Cameco, same thing. We were operating inside of a upward sloping channel for some time, broke down from it. Our measure move of that channel takes us down to like $14, maybe lower. Next target, $15.60 for the 236 Fibonacci. Looks very bad here. Copper, same thing. Trade got way too crowded. Took profits on this. This is CPER, copper index. You know, same thing. We were in a very strong channel to the upside. We broke down from that channel, tried to retest it. Could we still try to push up here higher? Maybe, but eventually I think we get this measure move back down, $22. We had this massive bottoming pattern, got the measure move all the way from $21 to $30. So I think it's very high likelihood we're going to end up right back down at those same levels again. Lithium, LIT, was definitely one of the more bullish. Got that stab up to a new high, but now we're coming down. If we don't hold $74 at this range, I think we're coming back down. Massively bullish on copper, on lithium, on silver, on uranium long term, but these things could easily go into 1 to multi-year bear markets. Lumber futures are just dumping. I mean, this thing is a waterfall just pouring out blood. It's down at 536 now. Next target is going to be the bottoming area right here. So it's the bottom of that entire wave to the upside. It is now sold off and lost that entire thing. After that, you know, we've got support at like, you know, I mean, back down at 450. This thing was at 1700. Lumber looks terrible. Absolutely terrible. And there's just massive amounts of lumbers just sitting around places now that companies bought at massive premiums. That they are not going to be able to sell. They're going to have to take huge losses just to move inventory or just sit on it for as long as it takes, which could literally be years before it ever gets back, if it ever gets back up to those highs again. It was a huge lumber bubble. Caterpillar, same thing, massive channel to the upside, broke down, got our measured move. We're already at, you know, basically we have our orange Fibonacci from the bottom here to the top. We came back down. This is our extension. The green target from the bottom to the top here is our 236 at 193. After that, 166. Again, I think this thing could easily lose 40 to 60% of its value. John Deere is the exact same chart. Slightly more bullish. It got a little bit more of a bullish reaction rally. Has not put in the measure move yet, but it could very easily come down to like 240 or 207 without making me even think twice. Looks terrible. Antero midstream. This is like a, you know, water, basically like green type deal. Again, same thing. Looks absolutely terrible. Giant pattern to the upside, and now it's getting ready to sell back off. Next target to the downside, $8.50 or lower. Looks bad. CX, Cemex, you know, talked about this one, said if it breaks down from our channel, same exact thing. We were in this up channel, broke down from it, tried to retest it as support. Looks like we're getting ready to break down again out of this thing. You know, next target, $6. After that, maybe $4.60. Looks terrible. Cemex, you know, infrastructure trade is over. It's done with. It was overcrowded. There was a bunch of money to be made and it should have already taken profits like I did. Or, you know, you're probably going to end up in losses eventually if you hold on too long. Cleveland Cliffs, this is a steel company. Same exact chart. Massive uptrending channel. Breakdown from it. Measure move initially $15. After that, $12.29. I mean, it's just target after target after target to the downside. Same thing over and over again on all these charts, all this infrastructure stuff. And now Ford is just a couple days behind. Same exact thing. Channel to the upside. We're down here at the bottom of the channel trying to hold on. Looks like it's getting ready to lose support. If it gets that measure move, if it gets that Fibonacci target, we're talking about $9.37. I did not exit the forward position yet, but I do plan on it first thing. Yeah, I mean, all this stuff looks the same. It all looks bad. So let's take a little break, and I'm going to get a little drink, use the restroom, and I'll be back in like 3 to 5 minutes. And then we will jump into our indexes, and we'll do tech after that. So, grab some popcorn or a drink or use the restroom, whatever, and we'll be right back with you shortly. In the meantime, I'll play a little music. Do, 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 do. Let me know if you get that reference. All right, peace. Don't mind me chewing on some cucumbers. All right, so Dow Jones Industrial Average. Take a look at our traditional markets. What I'm seeing here is potential for a, excuse me, for like a Wyckoff type distribution pattern. We had a very clear resistance right here and rejection. We came up above that area, got up and closed higher highs, but now we've gotten rejected. We're back inside of it. So we obviously have some support down here. We have a couple different patterns. We have some moving averages, etc. But this to me looks like essentially that throwover I was talking about. So we come up here, put in a high. If you go by closes, if you go by wicks, etc. And then we come back down, we have an initial support zone. Once we break inside of it, come down, take out that support. Everyone gets bearish. We move back up here, put in a very bullish candle, come back up, very bearish candle, get rejected at the top of the range, come back down, put in a lower low, everyone gets bearish again. That is basically just like a stab outside the range, and then we come up, put in a new all-time high. This looks very, very clearly like distribution to me. If this area would have held right here, it could look much more bullish to the upside. It's definitely still possible. We gap up and open right here and then continue to the upside, but we have to be very careful because otherwise this is going to look like distribution taking place. It already does look like distribution taking place. I mean, in all reality, this has not wiped out that much gains, but we've been inside this range since April this year. So Dow Jones still looks okay, about to get the cross sell on the Stochs. Definitely some red histograms showing up. Definitely a very bearish looking candle right here. But again, we expected all this because if we go out to the weekly was already not looking good. Sell by sell, we left the bullish control zone. We've had only red histograms this entire range. We've only been losing momentum. And now here we are. We have broken down below the slope line. The slope line is still blue, but everything points bearish right here except for the moving averages. We now essentially, on the bigger picture, you see what's happening. We're operating inside this range. We break up and then immediately get rejected and bearishly engulf like our candle before it. So again, I'm not completely giving up on traditional markets, but I would rather be risk off in this scenario. And people always think about this the wrong way. There's not literally just long and short. There's actually like 3 ways you can be positioned in the market. Long is obviously like net positive, which is like plus, mad bullish. Short is net negative or minus or bearish. And then there's also flat. Like flat is definitely a position. So you don't just go straight from bullish to bearish. You go from bullish to flat. And then as everything develops, you go from flat to bearish. Because it's much easier to go from bullish position in a market to a flat position in the market back to a bullish position in a market than it is to go from bullish to bearish to back to bullish. It doesn't have to be all positive or all negative. You can just be neutral sometimes. And sometimes, including right now, in my opinion, that's the best place to be. So, I think people think about it as risk on or risk off. But in all reality, there's you can be somewhere in between. You have risk on, you have risk off, and then you have risk on to the downside. So it's really like a light switch with like 3 settings. It's on, it's like negative light, and then neutral is in the middle. So bullish, neutral, and bearish. And right now I'm not completely bearish on the stock market. The same way I was bearish on crypto at the top, the same way I'm bearish on crypto now. I am actually, you could argue that I'm bearish long-term on crypto now, but I'm actually not bearish on crypto now because I'm not short on crypto. I'm neutral on crypto right now. So in all reality, I'm risk off in crypto and I'm risk off in the stock market, but I'm risk off in the stock market at what potentially could be a top, and I'm risk off on crypto at what potentially could be a bottom. So it's 2 different ways to think about it, And the best way to do it, in my opinion, and this is not financial advice, I'm not your financial advisor, these markets are extremely volatile, please do your own research, trade responsibly. The best thing to do is not think about it as, there's only 2 settings, all on or all off. There should just definitely be like a tapering into a risk on situation, a tapering out of a risk off situation, and then a tapering into a net short position, etc. So S&P on the daily, very bearish candle once again, wiping out weeks worth of gains here. Very bearish on the daily. If we switch over to our weekly, again, bearishly engulfed. Sell by, sell by, sell. We have put in bearish divergence. We, this still is hanging on right now. Still hanging on right now, but it's starting to look bad. We got to be careful here. Don't get too excited, in my opinion, but definitely looking like we're about to lose some key levels. The NASDAQ, again, we basically topped here, bottomed here, topped here at the same spot, put in a higher low, looked like we were putting in a bullish pattern, broke up from it. Is this just going to be a throw over though? We do not want to see this kind of selling action come in. And this, honestly, NASDAQ should be doing well as yields are going down. It should be a risk on situation for tech. So if this is what tech's doing when yields are going down, bond yields, what's going to happen when yields go up? Tech's going to get absolutely destroyed. So we got to be real careful with this one. Sell by sell, left the bullish control zone, all red histograms, about to cross 821 to the downside. Daily looks bad. Weekly still looks decent moving average wise, but we broke out and now we're failing. If we hold this level, maybe we continue to the upside. But again, this is very clear bearish divergence. That was our third drive of bearish divergence. What did we say? The last thing we want to see is a lower high here and a higher high in price action. Now we have a high, we have a lower high, we have a lower high, and we have red slope line now. And here we have a high. We have the same high or slightly lower high. And then here we have a higher high. So we have basically 3 drives of bearish divergence. Not good. Not good. But again, don't want to get crazy bearish on this yet. We just want to be like neutral to bearish. We're like neutral with a slight favor to bullish, but bearish, but still a little bullish. Russell looks the worst of anything. This thing didn't even put in a new high. So it came in here, put in a high way after everything else, and then failed to put in a new high afterwards. Already 821 across the downside, headed down here to $2,086. All red histograms, left the bullish control zone, got a fake little buy up here, hard sell now. About to cross the weekly, 821 back to the downside. Next target, like $2,000 on the weekly. This thing looks absolutely terrible. By far the worst of the indexes. XLB next. Material sector looks bad. Got the sell back here at $86. It's already down at 81, breaking down from support. Essentially like a low here, slightly higher high here, or higher low here, and now here we're right back at that low again. Looks like we're just going to get continuation to the downside, and we are very close to losing the 821 weekly. Eventually that will cross, and we'll see you down here at like $75. Materials look bad. XLC communication, again, 3 very bearish candles in a row. You could call these 3 black crows. I would say it's pretty clearly 3 black crows, which typically results in powerful selling to the downside. Buy, sell, left the bullish control zone, all red histograms. If you're not familiar with 3 black crows, there is a chart in the resource section. To group members also, that's in there too. It should be, actually. I'll have to look and see if it's on that chart for the trading tools. XLC communication on the weekly, very bearish. 2 bearish weeks in a row, getting ready to leave the bullish control zone, about to get the cross here. Bearish divergence over and over again as prices just creeped higher. Multiple red histograms on the weekly. Yeah, communication looks bad. Not as bad as some though. XLE energy, wow. I mean, this thing looks terrible. XLE on the daily energy sector, right back down, sold off violently to the downside. Bears are in control. Let's go to our longer time frames. The weekly has already crossed to the downside. Oh no, I'm sorry, it hasn't. We lost the 21. It has not crossed yet. So we probably get a pushback up here, but in all reality, I mean, this is all the sectors of the stock market. So somehow the indexes don't look that bad, but the sectors do. What does that tell you? Well, it tells you there's a couple key stocks holding up the entire stock market right now. A couple big names that are inside of the NASDAQ, that are inside the S&P, that are inside the Dow, couple performers. And what are they? Well, they're the Facebook, Apple, Amazon, Netflix, Google. It's the FANG stocks. They're holding up everything. Every chart we look at looks terrible. XLF, financial, looks bad on the daily. On the weekly, looks like we're getting rejected here, and we are likely to retest $35. After that, 32. Leaving the bullish control zone, hard sell signal, all red histograms. Likely to get some kind of bounce to the upside here, at least short term. Very, very bearish. Very bearish candle right there. XLI, industrial sector, same thing. Tried to hang on to this level, breaking down from it. Overall, just going sideways to down. barely hanging on to the 8 right now, slightly below it. Next target back down to $100. If we lose this level though, there's not a lot of support back down to like $91. So, left the bullish control zone, hard sell signal, all red histograms below the slope line. These weeklies were giving us, a very clear picture of what was happening, more so than the dailies. The dailies were still looking okay. The weeklies were telling us, hang on, something's not good here. We're losing momentum, we're losing strength, and we're at all-time highs. We're seeing weekly bearish divergence on all these charts. XLK, technology, tech looks terrible, obviously. Very bearish candles coming in here. Flip the parabolic SAR over to the downside. Hard sell signal, divergence signal, leaving the bullish control zone, multiple red histograms in a row on the daily. Weekly still looks decent on tech, but, bearish engulfing candle. It's not terrible. Maybe we can find support at 145. Maybe we find support at 140. Maybe we just put in divergence, bearish divergence on the weekly. Not good. XLP, and that's why I say I'm not completely bearish on all these things, but it's definitely a time to be in a, neutral or risk off position, in my opinion. I'm going to eat a cucumber for like 3 seconds. XLP, the daily's not telling us much. Weekly still looks good. Consumer staples look good, better than most. Hard sell signal, but we're at a lower high. Looks like we're getting ready to put in bearish divergence. We have lost, the slope line is still blue, but histograms below it. We could push back up. Consumer staples should honestly hang on decent, because there's a lot of stuff that people like need or will continue to buy, even if you want to consider it a need. XLRE, real estate sector, still very strong, still at all-time highs, putting in some very clear potential bearish divergence on the daily. Got to be real careful with this one. But, it's no secret that the real estate markets are overvalued all over the place. You can't buy, ridiculous amounts of mortgage-backed securities and not expect real estate go into a bubble. You can't have rates at basically zero and not expect real estate to go into a bubble. XLU, utilities, this is a risk off trade, a safety trade, the same way bonds and the dollars are. And look at this. Got the shot all the way back to the top of the channel, closed at the top of the channel. Is it going to break out and get our continuation move to our second trade target? I don't know. Probably not, but $70, maybe it does. You're not going to get rich off this one, but you're not going to get poor in a winning trade, I'll tell you that much. We're at the top, at the resistance. You guys know I like to sell resistance and buy support. But if you're already in this position, obviously still some potential for an upside move. But I would always just rather take profits and then buy on a retest at support if it holds. So utilities look decent. Again, there's definitely some serious targets to the up and downside on utilities. Overall, weak, hard sell signal, a bunch of red histograms, showing a little bit of strength, trying to push back up here. I don't love it, but again, we're not even close to, previous all-time highs on utilities back in February 2020 was $70 on the XLU. We didn't even get back up to that. So this thing has been a massive, massive underperformer. Massive underperformer. XRT, retail. Retail basically is a giant ascending triangle. This should be a bullish pattern. We should break to the upside, and instead it looks like we're getting ready to break to the downside. A bunch of bearish divergence taking place throughout this entire range. I don't know how people thought retail was going to be amazing. Like, it's of course going to see a pop. Of course, people are going to speculate that it will be good as everything reopens, and then they realize that retail is a fail now. There's too much online. There's too much consumer mentality has shifted. Habits have shifted. People are buying stuff online. Stores are closed. Retail is not going to do well. It's going to do better than when it was shut down, but it's not going to do well. And then, we're talking about potential more shutdowns, more regulations, more rules, more mandates. I don't think this is not going to look good in the long run. Weekly hard sell signal looks like it's about to break down from this level. Next target is the support at 89. After that, probably 76. Does not look good. Does not look good. And then the fundamentals just double down on it, not looking good. XLV, healthcare, looks strong. Healthcare is probably one of the strongest, but again, it's the best it's the prettiest ugly girl in my opinion. Hard sell signal, leaving the bullish control zone, bunch of red histograms in a row, never even reclaimed the slope line even after being above it that whole time while putting in new all-time highs. If I had to pick one, this is probably the place to be in my opinion, but I don't know. Still doesn't look great, but hanging out at all-time highs. I think healthcare is probably the best one we've looked at. Last but not least, consumer discretionary. Again, this is, it looks weak. Very bearish candles coming in. Hard sell signal on the daily. The weekly, basically just took out our last 2 weeks worth of price action. And, we're basically back where we were, back in April. Seeing a bunch of bearish divergence. We have a high here on price action, a high here on the oscillator. We have a lower high here with a higher high here. We have a lower high here with a higher high here. And now we have a lower high here with a higher high here. We have 4 very clear drives of bearish divergence on the weekly. I mean, this thing could easily cruise down to 172, maybe 160. I don't know. Is the child tax credit going to be enough? Is sending out a couple $1 billion to people with kids going to be enough to prop up these markets? No. They really need trillions. And every time they do this, they're going to need exponentially more trillions because it has a diminishing return every time they try to prop up, fugazi these markets to the upside. It's not going to work nearly as well. The more times they do it, the worse it's going to be. We're out of the Tesla trade. That was a nice little 20% to the upside. It has now sold back off down to our target. It is not surprising. Looks like we're breaking down from this level. Tesla on the weekly looks very bad. It looks like it's about to lose the 821. It doesn't look very bad, but it looks bad. Looks like it's getting ready to sell back off. I don't think Tesla's going to hold up well if markets get bearish. Airbnb got rejected at a key level, selling back off. I expect this thing very, very soon to be at 130, and then after that 120. And the second it loses 120, we got to look at our Fibonacci extension targets to the downside. I mean, after 121, the next target 1.236, $100. Then after that, 96. Then after that, 90. Then after that is our goal. The real target when I'm interested in this thing is probably somewhere between here. I'm interested in Airbnb between $84 and $90. We'll see if it gets there. Maybe it doesn't, but if it shows some strength before then, carves out this area and puts in a double bottom right here, a higher low, starts moving up, maybe there'll definitely be a trade there if that happens. But on the weekly, this thing looks terrible. 821 cross to the downside, very bearish looking candle at its all-time lows. This was the support right here. This was the support right here, and now we're at it again. So if we lose this level, I mean, it's game over. This is like literally do or die on Airbnb. If we lose this level now, it's game over. Do not collect go. Do not collect $100. Go straight to Airbnb jail. Bumble, it was a nice trade. 42% to the upside. Took profits here at resistance. And now we're just selling back off. Looks weak. Looks like it's going to continue selling off. If we look at it on the weekly, again, looks very weak. Massive bearish looking candles coming in here. I expect it down here at $46 very soon. After that, 38. Maybe it just keeps on cruising. There's nothing holding it up. It's all selling at this point in time. Everyone's negative, basically. And people that were smart took profits like we did. Holla. Holla to the group members. Holla to the channel. Baidu, I don't like how these Chinese stocks look. Giant descending triangle. I liked how they looked for a little bit. It looked like it was worth taking a stab at. But I don't like the fundamentals. And I don't like the technicals. Nothing looks good right now with this China stuff. It looks like we're basically going into like a Cold War with freaking China right now. And, the stock market reflects that. That was Baba TME, 10-cent music. Broke down from that key level it needed to hold and immediately just started capitulating. We could very easily be down here in like the $10, $11 region. After that, we might be back down in single digits. Looks very bad. Diddy at my foot and I want to touch it. DIDI, terrible. I mean, terrible. I thought we might get that gap fill all the way back up to like $14, but I mean, this company knew that they were under investigation by the Chinese government before they IPO'd, before they came like listed. So, I mean, this is a huge scandal. No one's talking about it. Acting like the Chinese government did something wrong. Chinese government told them they were under investigation. So it's, you know, you want to be mad at somebody, be mad at Diddy, not at the Chinese government. Or be mad at both, but be more mad at Diddy because they knew what was up. BZ, Kenzen Music, you know, got the beautiful gap fill up here at resistance. Hangs out here long enough. Maybe it breaks back up, but a lot of resistance overhead. And most of the charts we saw that had the same thing going on, where they had a very clear support, broke down from it, found resistance. Eventually, they just capitulated and rolled over. So not very much to look at on this, obviously, but doesn't look good. Neo, this thing is starting to sell off. Basically just put in a lower high, selling off, needs to find support. We'll have to wait and see. You know, this is an area it could easily find support, or it could easily just keep cruising down. Again, I don't like it. I don't like it. It, you know, topped out at sort of a strange area. Doesn't really line up that well with our Fibonacci from the top to the bottom. Tells me there may be something else in play that we're not seeing here. You know, maybe if we start moving this and picture where the real low is going to be, that looks a lot more reasonable to me. And this is another example of what we were just talking about earlier. This is where it sold off to so far. Look at where the blue lines interact at. They interact here with some resistance here, sort of interact. This is kind of in the middle of nowhere. Let's move this down until it starts making sense and see how it lines up. Look at it now. Perfect top right there. Okay? Perfect tops right here. You know, very clear support right here. Very clear support, resistance right here, resistance right here, support right here, resistance right here, support right here, support right here. That looks like what's going to happen. This looks like our low. Neo looks like it's coming down to $24. So, and again, it's not a fact. This is not a factual way to trade, but, you know, a lot of times there would be already predetermined targets based on these bots, based on these algorithms, based on Fibonacci levels, etc. And it looks to me like that's our target to the downside. It looks very likely that, you know, and that lines up almost perfectly with our measure move of this pattern breaking down, you know, which is starting to look more and more like a bearish pattern. So we'll see what happens. Maybe I'm wrong. Maybe it's all just made up stuff. But I have a feeling we're going to be down here very soon. Peloton, you know, looked decent. Tried to put in some bullishness here. Maybe it could put in like a inverted head and shoulders pattern. You know, this is our neckline. That's our neckline. This is our left shoulder. That's our head. That's our right shoulder, somewhere in this range. But, you know, overall, you know, and who knows, we go back on lockdowns or something like that. Maybe Peloton explodes again. But I think if this area doesn't hold where it's at now, it's coming back down to like 95 bucks. Underperformed as far as I'm concerned here. Maybe it finds support at a higher low here and continues on up to like 145, but I don't love how this looks right now. Etsy sold off perfectly at 618. Very bearish move here. Did not get any kind of like break. Looks bad. I think it sells back off here. I think it continues to the downside. ARKK, you know, we had a nice trade on this one. Did over 26. No. I think our initial trade was like 16%. What was it? Took profits right here. Yeah, 17 or 18%. Took profits back here. It has just sold off since then. We're right back at our entry level. We take the same trade again, except for I'm not bullish on this. You guys know how I feel about this arc. I think it topped here. That was our A. This was our B reflex rally. It underperformed as far as I'm concerned. Underperformed. I thought it was going to go to 786. Topped out at 618. And I think we put in a new low down here. We'll see though. But overall, you know, Kathy Wood, you guys know how I feel. You know, she did a thing. She got famous for it. Got popular. And now she's doing the same thing, but it's not working anymore because we're not in a bull market on most of this stuff, and it's just blowing up in her face left and right. She sold Apple at the bottom, bought a bunch of stuff at what she thought was the bottom, and then Apple blew up to the upside, and then all the other stuff underperformed, and now she's selling all her Chinese stocks at what is, you know, a new bottom, maybe the bottom, maybe not. I mean, she looks to me like a deer in headlights right now. She's just freaking out, and she's catching a bunch of flack, and she's still in the spotlight, but now it's in a bad way. And I think before long, she's going to look like a mosquito in a zapper. Eyes bulging out of her head. She's changing her tune every other week. She's multiple months behind on her technical and fundamental analysis of your boy Crypto Trend Trader. Kathy Wood is losing it. She's probably gonna have a breakdown soon. I think we're gonna see a lot of these fund managers, of these talking heads, of these online influencers. They're just gonna start one after another, like having breakdowns publicly. And it's gonna be sad, but it's also gonna be entertaining. So sit back with our popcorn. We're gonna enjoy it a little bit, but at the same time, we love people and we don't want to wish harm on others. With the exception of, no, there's no exceptions, but something bad happened to like Michael Saylor, I wouldn't be mad. I'd be like, oh shucks. ARKF, underperformer again. Looks terrible. Looks bad. You guys, I don't mean to like cut these short, but there's not a ton to see on most of these. Tech looks bad. Square looks bad. Could not put in a new high up here. Selling off now. Trying to hang on to these levels. But, all this stuff looks like it's just going to retest the lows. Square looks like it's coming back down to $200. Get ready to lose 20%. eBay got the breakout to the upside. Told you I didn't like it because the support didn't hold, and now we're just starting to bleed out. If it holds this time and starts to move back up, maybe I'll take this trade. Maybe not. I don't know. I don't love it, and everything else looks terrible. So why should one thing be good? I don't know. Maybe it will be. Another one, PayPal took profit on that trade as well. That was 17%. Took profit at the top of the range here. Done with it. I have no interest in being in this. Basically looks like a double top to me at this point in time. Looks like we're going to sell back off here. Starting to show some serious weakness. Again, 3 black crows here. We'll have to see what happens. We could easily oscillate around here. We could easily put in a new high, but as far as I'm concerned, risk off. Apple came back down. Maybe we close the gap and we continue to the upside, but this is one of the ones that's literally propping up the whole stock market. Looks like a throw over to me. If this area doesn't hold, we start selling off, it's going to be trouble central. I am still in a position on Apple, Amazon. I'm not for long, though, if it keeps up like this. I mean, again, we broke out from the top of the range, came back down. Does this hold this support, or do we just keep selling off here? Amazon, Apple, a couple of these other ones, Facebook, Google, Netflix, holding up the entire market. And Netflix doesn't even look that good. The Netflix chart does not even look that good. Facebook, looks decent, all-time high. Creeping up here, starting to show some serious weakness. A bunch of red histograms, hard sell signal. I really just don't know about this one. And same thing with Google. Google is still creeping, still doing good here at the top of the range. But we have quite a bit of bearish divergence. We have a very clear high here, a lower high here, and a third lower high here. If this tops out, we have a high here, we have a higher high here, we have a third higher high here. Very, very clear bearish divergence on multiple indicators. Sort of got a new high right here, but definitely a lower high here. So we have 3 drives of bearish divergence on the MACD, TJD, TDMACD, and we have 2 drives of bearish divergence on the Jewel Thief. So overall, not loving this price action. Definitely a risk off or, possibly like shorting environment, in my opinion. There's a lot of people have been calling for the end for 9 months or 5 years, depending who you ask. A lot of people have been saying this is going to go up forever. I like to be somewhere in the middle. I like to take advantage when it's going up and get out when it's going down. Same way we did with crypto. There's no reason for us to just like come up with an idea and stick with it. If the charts change, if the technical analysis changes, we're going to change our positions. And as of right now, I don't see many good places in any of these markets, in any of these sectors, in damn near anywhere to deploy capital. So what I'm doing, sitting on my capital, waiting for a better opportunity. Even if a couple things start going up, I don't think we're just going to all of a sudden see everything making new highs again. It's been months since that has happened. We have literally, this has been a musical chairs stock pickers market. The ETFs are doing okay because of a couple stocks, but overall, if I look at 200 charts like I did last week, I think I looked at 200 to 300 charts, and I think about 10 of them look good. I don't like looking at 190 to 240 bad charts and 10 good ones and deploying capital, because the truth is, if all these bad ones start dragging everything down, the good ones are going to get dragged down too. But if you're going to be invested in a couple things, might as well be invested in the best things. I would rather buy, like Warren Buffett says, I'd rather buy a good company at a fair valuation than a bad company for a discount or cheap or at a low valuation, something like that. So, buy strong stuff. If you're going to buy, don't buy shitty stuff because it seems like a deal. That's my opinion. So that's also Warren Buffett's opinion. I don't agree with Warren on everything, and I'm definitely better looking than he is. But truth is, it is what it is. The man's a genius. He has some great trades, investments, theories. His book is decent. Not one of my favorites, but overall decent. So appreciate all the positivity. Appreciate everybody that tuned in today. Appreciate everybody that watches this later on. Thank you guys very much. If you're here right now and you have not liked the video, please like it. Subscribe to the channel. Share it with your friends. Crypto Trend Trader. Love you guys. See you in the group. We're going to have a crazy week. This is going to be an amazing week for volatility. There are going to be some great opportunities. But the truth is, like we were saying, don't always need to be in a long or short. Sometimes the best position is just flat or waiting for your opportunity to pounce. The way I look at it right now, we are a saber-toothed tiger just sitting on top of a hill, and we're just watching all this chaos happen below us, and we're just getting ready to jump down and take the easy meat, take a bite out of whatever looks the best, whether it's crypto, whether it's stocks, whether it's gold, whatever. We are just getting ready to pounce on the easy money. I don't want that hard money. I want that easy money. All right, but that's it for tonight, guys. Crypto Trend Trader with our Sunday evening market look ahead. It is 10:39 on Sunday, July 18th, 2021, Eastern Standard Time. Love you guys. Everybody take care of your family. Take care of yourself. Stay positive. Invest in yourself. Not always the best time to purchase assets, but remember, more than anything, this is for entertainment purposes only. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out. Oh, and for the reference earlier, that was a Cable Guy reference. So if anybody got that, leave it in the comments. Catch you guys later. Peace.